Kurmetli dostlar, kurmetli әріптестер, ladies and gentlemen, dear friends, дорогие друзья.
Dear friends, let us start the first conference of ITS Ideas. As you know, ITS platform was launched last year, and this year we started our settlement and clearing structure. Recently we announced the connection of new brokers to our system, and today officially we announced that the first foreign broker, Envir, joined us. We have CEO of Envir here from Armenia. Thank you for coming. We have a hybrid format. Part of our participants is here, and most of our participants are with us online. Thank you for joining us online. We have participants from many countries, so during this day we will have some speakers here on our stage. Some speakers will be with us online from different countries. We will cover many interesting topics. We have Jim Rogers, a very interesting speaker. He will be with us online, and he will share his ideas on investments and his vision on the current financial events in our region and in the world. We will have a very interesting macroeconomic session that will be conducted here on stage and online as well. Yesterday, we added to our list about 1,000 new emittents. We have 2,754 emittents, issuers, and there are brokers who are joining us from Kazakhstan, from the region. So if there is anyone who hasn't joined us yet, so please, I kindly ask you to join. Now we will have our online session. Mr. Timur and Mr. Konrad from ADB. And the most important is that we have the governor of AIFC with us. So, Mr. Rinat Bekturov, please, we welcome you here for the official opening. And also our event is on the eve of Astana Financial Days that will take place here in the AIFC. We will have also lots of international participants. And so now I would like to give the floor to Mr. Rinat Bekturov. Thank you so much, Chingiz. Good day, dear friends, dear colleagues. First of all, on behalf of Astana International Financial Center, I would like to greet all of you here at our wonderful event that takes place here on the eve of Astana Finance Days 2024. Tomorrow, this event will start, and I hope most of you will participate in it. Well, first of all, I would like to thank all ITS team. I would like to thank you, Roman, for this innovative spirit, because I think that ITS is an innovative financial platform that makes capital markets global, and we've heard that more than 1,000 new shares have been listed. So we thank you for innovation, for this innovative spirit, and this fully complies with the DNA of Astana International Financial Center and complies with the topic of this Astana Finance Days: Innovate, Invest, Impact. And secondly, I would like to highlight that our work jointly with ITS is not just, let's say, joint efforts. This is a synergy, a big synergy. Astana International Financial Center is the hub for international capital markets, and ITS, as the first MTF, multi-trading facilities, consolidates here the liquidity from our region and from this regional time zone. So all of this is consolidated here in our region, and I think that we do here the same work. We develop financial markets, so our aim is to create new tools, and the aim is to mobilize capital for the growth of the economy in our country and in the region. And of course, liquidity is very important here, and ITS is one of that platform that will consolidate liquidity in the AIFC, in this region, and it will flow later to local markets, to local projects. And so again, I want to highlight that it's not a joint work, it's a synergy.
Here that the ITS has launched its post-trading facility locally in AFC. I think that creates a lot of opportunity for creating new products, new solutions for the region, for the financial institutions. And again, I am very happy and to work together that we have come through some of the hurdles that the life has proposed us. We successfully passed through them. Again, congratulations on this event, which is happening within the Astana Finance Days. I welcome everyone and urge everyone to register and participate in our event. Congratulations. I'm sure that the day will be filled with the insights, with the meaningful discussions, and the new opportunities and networks, friendships, relationships will be established. Congratulations.
I would like to greet you from Washington, and I would like to join the words that have been mentioned before. Congratulate everyone. Let me start from the following. The market has specific requirements to its participants, and there were some specific requirements to economic cycle, to inflation, to industry. And it seems that all these requirements are growing, and we need, so that to save the funds, not only to increase them, we need to take into account lots of different factors connected with regulations. We need to take into account all these efforts that are happening now with regard to the green agenda and climate change issues. And it is difficult for one investor to do all of this, but I hope that today, all of us jointly, we will try to speak about the prospects in the economies of major countries, big countries, and how investors would distribute their assets and funds. So the participants of our session, they are, let's say, best investors, best specialists, experts in the industries. I will introduce them. So we have Mr. Timur Turlov, international investment group with listed at NASDAQ, Freedom Holding Corp. So Freedom provides different services in managing securities, and they provide access to American exchange market. Today we also have Konrad Albrecht. Konrad is one of the leading experts in sustainable development, and also Konrad is head of the Directorate of Sustainability, Eurasian Development Bank. Today with us online we have Chris Weaver. Chris is known to many of you. Chris is a partner and the CEO of Micro Advisory. This is a micro consulting company that deals with consulting of major corporations, strategic investments on investment risks with regard to Eurasia. We also have Vladimir Osakovsky. He is a director and the strategist and economist specialist. He has a focus on sovereign markets. He covers developing markets, and he works also with regard to Balkanian countries and East European countries. Today we will discuss about the prospects of American markets and other markets, and but now I just take 2 of your minutes so that to set some background, and I will try to tell you our overview on the main issues that will influence your portfolios, your investments, what we will see in the nearest 2 to 3 years from macroeconomic point of view. I will not take lots of your time, but let me cover 5 topics or 5 events that we monitoring, and we are trying to understand what will happen. First of all, changes in the global growth rates. economic growth. And we consider that in the nearest 10 years, economic growth will slow down. The global economy will grow slower than it was before, and it would be the challenge for micro capital markets. Mainly, this would happen due to the structural slowing down of Chinese economy. Here you can see the second graph on the right. This is a contribution of Chinese economy to the global economic growth over the last 40 years. You see, we got used to the fact that almost 1.5% of global growth, that was not high, it was about 4 years in the previous 20 years, and we see that a quarter of it comes from China, and we see that it was quite stable over these recent years, and we also see that there are some other challenges, demographic challenges, change in the focus of Chinese government from internal investments to new production skills, and all of these lead us to the slowing down of the economy. The life quality is increasing, however, the economic growth is not as high as it was before, and probably in the nearest 5 years we will see that the contribution of China will change. And if our calculations and settlements are right, we will see that this contribution or less contribution of China will be substituted by contribution from India. So for many years we have seen that India was a prospective country, and it seems that over the last 10 years, this economy from the promising becomes the real driver, and its contribution to global economy is still not high. The country is growing mainly due to the internal demand rather than from export. The second challenge for us would be the geo-economic competition growth, and we see a growth of expenditures related to this acute situation of this geo-economic competition. Our world has never been, let's say, calm. However, what we see now, we see that conflicts are being intensified and in some specific points of economic activities, and we see these in many other areas. We see the example of Taiwan, for example, and we see the growing number of incidents, the growing number of rhetoric, and our, let's say, pressure and tension index in this area has been increased. So what it means for markets? Probably we will see the structural growth of military expenses, and it will be the challenge for the debt markets, especially if we see that debt level in developing markets are quite high, and maybe we'll come to a situation of the beginning of 2000s. The third challenge, as we see it, would be the situation at the raw markets or commodity markets. Before we understood that investors found these commodity or raw markets as stable places. But there were some tensions connected with the growing prices for oil or gold, and we see that nowadays the price for gold is quite high, but with all the situation is different, and it is important because the behavior of large oil countries changed. Up to 2014, many large countries, oil countries, they saved their funds in some bonds, and we saw the global stabilization of this macroeconomic market. So high oil prices provided the high demand for risk-free assets. But about 10 years ago, the situation has changed, and countries started to invest in real assets in their countries. It sounds good. However, we see the changes in the budget policy. And we see, for example, that in Saudi Arabia, this oil price increased up to $110 or even higher. And for us, for investors, it means that the risk grows, and this solidarity of institutional bodies' action is a specific one. And now countries will agree and will between them will try to stabilize the prices, but it's also the challenge. And the fourth issue that we have concerns is the depth of recession in the US. Over the last year and a half, many investors expected the slowing down of economy in the US, and many considered it the most expected recession in the history in the economy. And up till now, the numbers were quite good. But let us now look at the graph on the left. This is an unemployment rate, and this is how the specialists in forecasting saw it in the beginning of this year. We see that gradually, month after month, the data on the numbers are even worse than the expectations from the specialists. And these negative surprises are accumulated. And right now we see that unemployment is at the specific trajectory, and probably we will come to the rate 4.5 by the end of this year, and maybe next year it will be even more than 5%. We have the optimism with regard to the not so deep recession. However, you know that when this business situation is decreasing, it is difficult to control the situation. And finally, the final challenge, and I think that we will also discuss it, we speak about the elections in the US. The main difference between two candidates for the presidential election in October in the US, we see the difference in their internal policy, but the main difference is their approach in the trade regulation and the attitude to the trade in general. The President Trump suggests their tariffs up to 60% to import from China and 10% for import from other countries. And for us, we think it would be the seismic shock for the global economy, and it might lead to the reductions of thumb rates in China, and it will also impact inflation. It will impact the growth of some countries. Some countries might have some winnings from this situation. I mean, connectors countries, the countries that are between the seismic platforms, let's say. But for the global economy in general, it would be the great shock. These are 5 topics, and these are 5 challenges that would be the key challenges for the market in the nearest time. And I would like to ask a question to Mr. Vladimir Osakovsky. Bank of America forecasts, they are quite optimistic. And I follow your reviews, and I see that there were changes in expectations in recession. In your opinion, will the recession happen this year? Or maybe just share your main forecasts with regard to the probability of recession next year and some prospects with regard to monetary policies.
Thanks a lot to everybody. Generally speaking, I'd like to say that forecasting is not a good thing. Everything depends on the data that are changed and reconsidered. always into both sides, and the basic scenario, soft landing scenario, lack of recession and slowing down of economy, or no recession economy, was replaced by expectations of recession this year, and it was it sounds right. And we expect 2.5% of this year, slowing down of economy, and 3% next year. And economy is getting slower according to its trends, and according to the basic scenario, we are waiting for FRS ratings going down this month already, 25 bids in September and 25 in October, and in both quarters by 25. And according to the results of the year was that FRS will never slow down the rates or decrease the rates, as far as inflation was not slowing down the economy in that rapid way as we expected, but there was a conversation whether there will be reduction of the rate this year or next year, or whether it happens at all. But now the discussions say that this year we will expect 1.5% of decreasing the rate. And in these conditions, we are with the basic forecasts that there will be no reduction, but there will be slowing down. Why? Because of the same reasons that already postponed that reduction. And we expected recession last year, this year, and the basic scenario was the same in everyone. But by 2025, we have still all the reasons are the same at this period of time as well. Everybody expected the very sharp slowing down of consumption in the US, and vice versa. It did not slow down in that speed to cause the recession, and we could get the negative values, but a recession didn't happen in 2022. Both in 2023 and 2024 so far, we do not observe it. Why? Because the employment market and growth of revenues that was in stagnation for a long period of time, and now growth of consumption is observed, and dynamics is still the same as it was in the previous several years. And what caused the discussion of how lending during the recent time? There were very weak data about employment market. We reconsidered this data during 2 months in July and August. Yes, there is some growth of unemployment, but other indicators, according to our point of view, are in the range of those that could slightly slow down the economy. And the slowing or robust claims are the indicators of normalization of employment market versus this warmed state it was in the 2 last years, when they cannot find the workers, and how much the hour of McDonald's could be paid, and etc. Such indicators say that employment market was in a very warmed position, and now comes to normalization point. Growth for unemployment applications and unemployment rate is the basic indicator that there are huge problems in economy, in corporate sector. According to our basic scenario, employment market in the US is coming to its norm, is not shrinked, and this is the basics for the economy of the US. And there are many other reasons, like, for example, immigration growth, as well as dynamics of different types. Both values not always adequately contributed into the statistical data, which also could make to reconsider the data. And growth of employed and employment market is quite significant in the US, and this causes political debates. But for aggregate demand, this is a positive factor, and it is in the same values now and in the nearest future. Apart to this, we may look at other macro data, like, for example, recovery of other indicators in the production and etc. And this is included into the basic scenario based on the available data of today, but should be reconsidered depending on how such data will evolve, and we need to keep track of that in attentive way, as far as this is additional element into the discussions where we are moving to the recession or to the soft landing. We are for the soft landing. We will have a look at that, and we will also talk about the elections, which also is directly related to the fiscal policy of the US and in the mid-term perspective. Thank you very much, Vladimir. I think that this is a very good remark, and I'd like to say that this debate about the employment market figures is at the academic level, and people try to understand why they are so low. And it also has some pragmatic consequences for investors. We saw the response of the market for this at these figures when they look weaker and could shrink the capitalization of the market and cause another shock, which caused this dollar capitalization. Now I'd like to ask the next question and ask it from Timur. Could you share your assessments? What are the trends? What are the figures that should be kept track by investors who would like to multiply their capital? For you, this would be some probably other markets, other figures that we need to keep track of. Thank you very much. I'd like to remind, first of all, that economy is behavioral science at which the response of people are quite different depending on external conditions we are surrounded with. That's why it's not very easy to make some analogies, like last year we did in this way, this year it may be some different thing, and people could respond to the events in a different way than they responded before. And the main factor, the main lesson that we'd like to learn is maybe that we never lived during such a long period of time in real negative rates, absolutely zero rates in the developed world. This was quite a long period and lasted practically 15 years. And in general, we never saw such a period when we had risk-free income at zero level. We faced the fiscal motivation during COVID times, and with the increase of inflation that turned out to be sudden for everyone, as far as economy for a long time never responded any monetary way, but we thought that it never impacts on the inflation and didn't accelerate the crediting, maybe because of the shock that we faced in 2008. I just give small examples in order to show that if before in the classical theory zero rate should have caused the wider crediting opportunities, factually it decreased such opportunities during the last 15 years. And the central bank took a role that was played by the second-tier banks, like a main creditor in the mortgage sector in the developed countries, thanks to the fact that central banks had a lot of bonds in order to incentivize the economy, and the national banks stopped to be interested in it since 2008. The second, and there was impression that there is a lot of money in the financial markets and the value of money increased objectively, but in the market the concentration happened of the great seventh role was quite great, and volume of trade also is from this great seven powers, and the role of retailer as well plays much greater impact. And we understand that retail incentivizes concentration in the most famous and popular bonds. And finally, as everyone discussed, that in order to make the first trillion, they spent 15, 20 years, and 30 trillions could be made during a quarter, and the fourth trillion could be made during 3 days. And such concentration of the trade volumes, as well as concentration of efficiency in economy at some degree. And this is not that speculative bubble that we probably observe, but first of all, this is concentration of efficiency that is happening, because before the impression was that companies could not pretend for such kind of a great role, and one company could not create such a value for the whole world like now it can do. And we should not ignore this as well. And this certainly makes some impacts from the generative artificial intellect as well. And this 15% or 0% plays no role as far as here there is such a huge revolution. Some people thought that this incentivized huge demand and activeness of investments, and the impression was made that there were huge ideas, and technological revolution presented such kind of ideas to the mankind that started to look more attractive with its risk-free revenues. And people like these risk-free revenues if they are too much scared or they do not see any significant premium for risk. And it looks like the fear in investors decreased during these 15 years. At the same time, several huge ideas appeared that created huge competition in risk-free revenues opportunities. And all these things, no doubt, causes the fact, and I will not argue against concepts for increasing the key rate, but we see that gradually the respected economists made mistakes to reduce the key rates, and regulators probably will be too brave to make such a step. And regulators do not want to hurry up because they do not see any cooling of economy in that way they want it. They don't see any slowing down of inflation. Inflation is still a bit higher, and the economy doesn't want to slow down too much. And investors in the exchange stock exchanges do not expect any recession for huge number of people. When Nasdaq adds dozens of points, and this is so-called forecast that comes true, and we should get prepared for high volatility in the markets as far as the market became more concentrated. There are very many huge auctions that usually decreases this range of trades, and they also never traded in such a active way like it was before. But we should no doubt understand that rate reduction tempos could not be that big as we thought. And certainly there are some discussions happening now, and I heard in July and August such discussions that there would be some emergency account that the Federal Reserve System will suddenly reduce the rates. But we understand that on the one side the rate could be lower this year, but it will not happen in a sudden way. There are no efficient indicators for such a rate reduction. There is no panic in the market. There are not any other things that we observed before. That's why let us get prepared that the situation in the market will be more or less sustainable and stable, and we will not be able to use the same templates. We never faced such incentivizing before, never sharply changing demography like China was transferred into the European country. They have this birth rate reduced so strongly, and the demography, one of the fundamental development. And let us repeat once more that one of the biggest mistakes for investors could be attempt to use the standard rules for decision making. There are no standard rules, and there is a lot of big data that we are able to analyze in order to understand better what happens in the economy. And I expect probably some breaking through in the economic science thanks to our machine learning. We will obtain much more information that could be processed in a better quality level, and we will have better understanding what is happening in the economy. As far as we cannot rely on many things in a standard way like we were used to and compare it with what was before, will never be correct, as far as we will be amazed more and more in the future.
Thank you very much. You know, this story about the negative rates, it should be the sixth challenge or sixth tendency. And again, will we get back to the free money era, or the money will cost companies a lot, and how will it impact the quality of growth? Also would like to join the thesis on no data. If we look at the market's behavior today, we will see that the quality of traditional statistics is decreasing. I mean, the work of some statistical institutions. And we see that companies reluctantly fill in the data, and that's why we see this specific quality. We need to think about new indicators, otherwise markets would be in the high volatility situation. I now would like to ask Christopher. Christopher, just now we've discussed the issue of the how concentration of returns, and it's true, the capitalization of the first 10 shares in S&P was twice lower. Before it was 14%, now there's a number. But there is other challenge for investor, the geographical concentration of this liquidity. So maybe you will choose not only wrong share, but you might choose wrong investment geography, and you might lose if we compare some other countries. Let us compare, for example, US index with NASDAQ, S&P, and some other European indexes. Could you please tell us about your ideas and your thoughts on where, from the geographical point of view, investors shall focus, where we see high risks and where we see high opportunities?
Thank you, Alexander. And apologies, I will speak in English. I see the translation function is working very well, and I hope, therefore, it continues that you will understand me, just to avoid mistakes. I should also start by saying that macro advisory, we look longer term rather than in the short term. Our clients are mostly multinationals as well as strategic investors. Therefore, we look more at what will be the trend over the next 1 year, 2 years, rather than over the short term. But that said, I do agree with previous speakers on the prospect for more volatility in all global markets. And there is a great deal of uncertainty. Of course, we're already in it, but that uncertainty in global markets is not going to ease. We have the major US election, which is the biggest unknown, and not even so much unknown as to who will win, but what will it do for the new government's new administration's policies? What will be its focus? What will be its fiscal policies? All of which will not only impact the US economy, excuse me, global economy as well. We saw just last week or a few days ago the outcome of the first of the major German elections. Of course, a significant change, which means that we're going to have a significant amount of uncertainty in Germany with regard not only to politics, but also what it means for fiscal policy and perhaps then monetary policy right up to the end of next year when the federal elections take place. And of course, France is in the early stages of preparing for its election transition, and we're not too long after the European Union elections as well. So it basically means that there is a significant amount of policy uncertainty that will remain in all markets. And we really don't, therefore, have a clear picture of what will be government actions with regard to the economy until the election cycle is over. Remember that most governments have inherited a significant amount of debt, a lot of it because of COVID, of course, but also other factors, spending factors, defense spending, all of these things combined. So governments have a significant amount of debt. They will need to start addressing that debt, bringing it down. So tax policies, we can certainly expect that to change, and also regulatory issues to change. So if we look at the technology sector, and of course, this is the fastest growing area, and it's easy to say right now you should load up on AI technologies or any related fast changing technologies. And historically, that is correct. Of course, the emergence of these technologies and particularly new technologies always comes with a lot of uncertainty. If you look back in the 90s at the emergence of the internet, the companies like Amazon, Google, etc., there was a lot of volatility, a lot of uncertainty, a lot of noise. You get again, it's a good one to look back at because you got probably hundreds of companies that claimed to be the kind of the next big generation in their field in the 1990s. And in the end, when the volatility was finished and the casualties were known, you ended up maybe just with less than a dozen, and some of which we know now today, like Meta, Apple, Amazon, etc., the winners. So you will get that. The AI will have dozens of companies, and many of them will fail. And we're getting into that stage. And what governments do with regard to regulation of this industry, what happened with Pablo Durov just recently in France, you can expect more of that. Taxation will change when governments our new governments come in and they start to look at their balance sheet and what they need to do. So first thing is, therefore, I would absolutely agree. We'd expect to see a lot of volatility in equity markets, probably over the next 12 months, particularly through 2025, until these issues are better understood. And on top of that, of course, we have geopolitical issues. Again, maybe it depends more on who is the next US president as to how the US-China relationship develops, whether it becomes more belligerent, and therefore in terms of trade wars, which will have a global impact, or whether it's handled in a different way. That will be critical, clearly, for all markets. But again, we simply don't know that. For me, the better asset class option for 2025 is the debt market. We are specialists in emerging markets, excuse me, developing markets and commodities. So therefore, it's no surprise that I would say that I am definitely looking much more at opportunities within developing markets. I mean, if we look at Kazakhstan, of course, where this event is being hosted from today, we see, obviously high interest rates, high yields, but a country with a good balance sheet. And that's critical. When rather than just looking at who's paying the most interest on their debt, you obviously have to look at how sustainable is that, what is the structure of the balance sheet, whether there's strain, whether it's comfortable. And if you look at Kazakhstan and also neighboring Uzbekistan, you see high yields, partly because of maybe the contagion from the conflict between Russia and Ukraine and the uncertainty that that's created. But I really do strongly believe that investing in kind of high yields in emerging markets, particularly good balance sheet countries, good fiscal structure companies like Kazakhstan and Uzbekistan, that's a good place in terms of parking money through what I would expect to be a volatile period in global markets over the next 12 months in particular. Obviously interest rates, as our previous speakers have said, expectations that they're going to come down quickly have now gone. If you were to ask most people this time last year, they would have talked about interest rates coming down much faster this year, probably because expectations of growth were better. A lot of it was because you always get government actions in election year, but because inflation is staying stubbornly high, because global uncertainties are at a very high level, therefore, the expectation that interest rates are going to come down has moderated. So I certainly agree. We would expect a much shallower reduction. Frankly, I would not expect rates to start coming down probably until the middle of next year. I mean, easing, I guess, by the end of this year, coming into the start of next year, but really coming down maybe this time next year, coming into next autumn, because that's when I would expect some greater clarity on global issues and on government policies post-election. But also I expect reasonable to assume that the inflation trend will also be looking a lot better, easing this time next year. So let me just summarize then by making a clear statement that I do expect a lot of volatility in equities, particularly because of government actions and maybe some surprise actions after elections. And I do strongly believe in the quality of emerging market debt. Yields are too high in many countries. Balance sheets are good. So choose the countries with good, stable balance sheets, good, sustainable budget positions, and those yields will come down.
Thanks, Christopher. Appreciate your insights. Я бы, мне кажется, что здесь логично.
I think that here now it is very important to mention that the behavior of investor would depend on the regulation of some countries. And here we can address also to Mr. Conrad. Recently we've seen lots of researchers that showed that for investors, investments in green companies, in high ESG rating companies, so there was a lower risk for investors in such company. And there are different theories why it happens. One of the explanations was that such companies are less vulnerable to the regulatory shocks. So if it is a real sustainable company which follows the climate change agenda, then probably you have lower risk and better future yields. What do you think? Nowadays, we are expecting the slowing down of business activities. What do you think? Will ESG agenda go through all these challenges? And in the investments decision, shall we take into account these ESG ratings? Thank you so much. I am from Brazil. I don't speak Russian.
English, but I apologize. But I hope we can also be productive as the last speaker for the session, so it's not always easy. And I think I will just have a quick initial point from the last speaker. I think it's very important for emerging markets or developing countries that we have seen and the interest for what can look for debt markets. This is very good for also sustainable development as we look for green bonds, sustainability-linked bonds for corporates to develop. This is extremely important for getting those flows to countries like Kazakhstan and Central Asia. So that's also a good positive view that we and I personally see as important, in addition to liquid or more traditional asset classes, including stocks and equities, but also what we can see, I'm going to talk a little bit more after, on sustainable infrastructure as well, so what MDB can also contribute for the agenda. And I also like to, if I may, I usually like to break some protocols, so I also do something more interactive, as also we are here physically with the audience. ESG, or sustainability, I think it's not something completely new for everyone, but I will ask the audience, this is the first time you are hearing about ESG. If it's the very first time, and it is okay, just raise your hand, just so I can understand. If there are no raised hands, it means that everyone knows at least the concept. Or what about ESG, environmental, social, and governance? But if I ask again, do you consider ESG in your personal investments? And then you can also raise a hand, or at least you look for the companies you invest if they're more responsible, or if they're looking for an environment and their social impact on their policies and their products. A little more. Yes, that's good, a good start. That's what we also need to consider, how we are using this in our daily lives. So how can also be cyclical. It's fortunately or not also part of a cycle. So when we look this for economic terms, it is, yes, it's usually on the verge, let's say, of what is considering on a down path of the economy, not necessarily, but usually ESG will not be on the spotlight as well. So investments or interest from individuals and especially institutional investors on the topic. But on the other hand, we also, when we have like a more stable or a growth momentum, or the markets are growing and blooming, of course, it's going to be very important for ESG and for the topic to be more on the top of the agenda of our clients, of individuals, and especially as we have the focus here for institutional investors. But the cyclicality can also be driven by, I would say, a very enduring effect for the next few years, which is the demographics shift. So basically, how do we see, that's also the question that I address. Probably your children, your relatives, the younger generation, the Gen Z, or even the millennials, which is my generation, were born in the 80s and onwards to the 90s, we started to consider more sustainability as our impact for our lives, or ESG as more as an economic or more investment terminology than sustainability. We can also divide those two into different spectrums. It's not necessarily as synonymous for each one. ESG is much more what we can see as a more packed label that corporations and especially investors can utilize on their investment policies and to follow, yes, their positive impact or how they can avoid, for instance, the negative impact on their investments and therefore their highest responsibility from what they have on their portfolios, either listed or non-listed assets, and how they position this to the corporate world and to their clients, and clients even for individuals, high private network individuals, or even to the retail investors. So this is a very key point for changing demographics. So that's part of the cycle that changes from the, let's say, the baby boomers. Nowadays, if you have many different research and surveys, you're going to see that the more recent generation, the more younger generation, they're much more interested on the topic. But of course, you also have changing regulatory landscape. And this is also something I think the previous speaker said, and also the other speaker said about regulation. This is important to consider if Kazakhstan, for instance, is a very trivial market, and I see that we have the standards here for driving international investments to the country, to SDG 7, clear and renewable energy that we can use, but not just for the energy sector, but across different sectors of the economy, even to hard-to-abate industries. But that's, you all need regulatory incentive, and a very strong one. And also I will add to the legal safeguards that you can need and you need to have to see this in the country. And this is also the case here. You also have AFC, you have the Green Finance Center, which is a very important center for driving what we can see changing the ESG landscape of corporates and banks here in Central Asia, specialized here in Kazakhstan, the largest economy of the region. This is also based on the British law, so as far as I'm aware. So this is also how you signal this to investors. That's the expectation that this market will be stable when you get your inflows to the region. So that's another point. And another interesting point we can say is when we have this cyclical interest of ESG, whenever we have more on the politics, so the political, let's say the politics spectrum, fortunately or not, and I believe it's more unfortunate when this is more considered as a debate that should be one or the other, that one party will be more pro and con. I think this is for across the board. It should not be a political decision. Of course, the political decision should be always considered on sustainability. That's the only way we all need to go, because all the countries, if we take, for instance, climate considerations, they're basically all the countries part of the UNFCCC, the Climate Change Conference of the Parties, the famous COP that's going to happen now close by here in Azerbaijan, in Baku. So when you see all the countries there, you see that all those countries here, for instance, in our bank, 6-member countries, they all have national determined contributions. Basically, in other terms, to lower their long-term emissions by 2030, the midpoint, by 2050, by 2060, depending on the country. So that's a signal as well that we see that climate is extremely important. It's not more a debate of if it is happening or not. Climate change, there is happening already, and since a long time. So we see that it's going to be from the top down. So this is to have the countries pushing this agenda. That's also going to be resonating with the corporates that will be interested to see how they can also provide solutions, how adapted they will be to capture this momentum, growing momentum for the next few years to transform the economies to a more low carbon environment for business as well. So how those companies will be positioned, and the investors, of course, most importantly, how they're going to be allocating their investments towards those opportunities, for instance, here in Central Asia and in Kazakhstan. So asset allocators or strategists or on a tactics side, there are many different investment styles that can be considered as well. And I think that's a very important market that should be always on the radar for the international community. Well, market trends as well, in addition to politics, you can also see when you have more the media, of course, when you have some market incidents, or when you see some events from the corporate incidents. Basically, when you have, like in my country, in Brazil, in 2019, we have a company, a mining company, an international company that had a tailing dam failure. There was a breach, and that was a magnificent, let's say, a catastrophic event that still nowadays is facing, the company is facing legal obligations, and the investments are going to be needed to, recouple with all that losses of human loss, the environmental damage that happened in the country. And of course, when that happened on the day of the event, if you look to the equity, which is a listed company, it went down tremendously. So it's the impact on the investment if you don't consider that. So for trying to avoid, it's also important to see this on a perspective, how strong is a company that I will invest on their ESG footprint? How strong is the governance of that company? How responsible it is with the society, even though the products or the investment strategy of that company or the services it provides is not positively impacted by nature. Let's say it's still a coal mining company that you wanted to invest, but this company is also aware of the ESG trend that is happening in the market, that this company eventually will need to be more on exposure of its investments to transition its own facilities, let's say from coal to gas, or to other, let's say, to green hydrogen, even it's also economically feasible for the near future. Whenever, of course, green hydrogen, you have also the facilities surrounding that can be also affordable in an economic investment. That's also needs international support. So, of course, this is going to be cyclical in the end of the interests and those market shifts and shocks that happens. So this is by the expectations that we can now see. And of course, and you also have market data, and we were talking here more on macroeconomic sides and also on the microeconomic points. When we look to the companies, ESG data is out there in the market. There's always a debate when you have, for instance, market raters or ESG rating companies or index providers. They have different methodologies, but usually they find or they tend to follow a common path on their methodological assumptions and the base bulk of their methodology. But of course, they have preferences, they have different focus on niche, on which investors they would offer that solution. But in the end, we have as investors and financiers more data to analyze. So if you ask, well, I have like a bunch of data of ESG, probably you need, of course, an ESG specialist or an ESG analyst or a sustainability-driven person that will help to spotify or to highlight that given risk of your investment, but also the opportunity set that investing on that can also be for the company, for the position of investing more on impact investing, for instance. Or if you don't want it to have more, this all depends on your investment policy. You don't want it to be more exposed to coal or to oil and gas industry. That's also more as a, let's say, negative screening, exclusionist behavior, or your investment viewpoint. That's also okay. But in the end, we can also see where, and we, the bank, we really focus on, for instance, transition finance. So we understand that we have a very important role in our mandate in the economies of Central Asia, inclusive Kazakhstan. Kazakhstan, of course, the most GHG high emissions in terms of coal, the energy vector. So we understand we cannot just leave those industries behind, hard-to-abate industries. We have to support them to transition to more clean fuel, if it's still like blue hydrogen, if it's still from coal to gas, but of course more renewable projects. So when I hear that's like the interest for debt markets expected to be the most interesting for 2024, end of the year, and 2025, that's of course when you see sustainable bond markets also should be in the radar. So of course it's going to be cyclical. We have again COVID-19. That's probably when the majority of the markets, they saw the opportunity, and then of course we had a moment of reflection of our own investments and allocations and strategies when that happened, that unfortunate event. But that was also the turning point of ESG agenda. So if you ask for me, again, this is something that could be just cyclical. Yes, it's cyclical. It moves with market directions with systematic shifts or none, or idiosyncratic from the companies. But this is something that is not going to be, again, probably in 5 years, everyone should be mainstream this on their investment decisions, especially on institutional investors and, of course, corporates. So the companies that we have to invest in listed companies or not listed, when we tend to also buy those bonds in the market, or we also want to invest on private sector inclusive. So we'll just conclude with those remarks. Thank you so much.
Thanks a lot. This was very insightful. Actually, if there's any kind of cyclical part to the ESG interest, then definitely your bank's reports are part of that cycle. I would recommend everyone to just check out the EABER's presentations on ESG, especially for our region. They are full of data, very insightful and really comprehensive. Спасибо большое за ваше замечание и за отчет ЯБРа по теме ESG.
Thank you very much. Let us continue to talk about sustainable development and ESG agendas. I'd like to go back with these details to more pragmatic aspects and our expectations, and for probably to make synchronization, what kind of assets and what is the most prospective geography for the investors. For many of these panel speakers, I just visited the portfolio of Timur Turlov, where there is distribution of assets by several bonds. And I think that, in my view, one of the unique peculiarities of this web page is, on the one side, the warning for some investments. There are assets that could lose their value, and it impacts on me like any disclaimer. And on this other side, it shows opportunities for better management of your portfolio, including different assets in the area of IT and etc. I'd like to ask Timur Ruslanovich whether you plan to structurize your portfolio and what, in your view, could be some preview how to update the portfolio and how portfolio should look like from the perspective of the aggressive investor. We need to give a context as far as the portfolio was gathered in May 2022 with some specific idea. And this was not a balanced portfolio. It was a portfolio that was gathered in a situational way in order to restore some companies that, in our view, had very good fundamental indicators, and to make some corrections that happened in 2022, when in May Nasdaq lost several dozens of rates, and the companies suffered from that, and the bubbles probably disappeared from the market. But there was a number of companies that had very good perspective for restoration or recovery. And maybe the idea did not make that portfolio one of the best, but it showed very good results in 4 months, showing some growth, and portfolio played quite a good role, but was not very successful in the longer term perspective. Some companies restored, made or increased 3 times since that time, and now valued much more, and some lost their value. And characterizing the history, I'd like to say that if the market was growing in a wide and even way in 2022, and we saw that growth was observed even in a stick that was put in a better soil, and it was quite inspiring, and money was given to quite a big number of companies. And performance of that portfolio shows the idea that capital strongly was focused during the last year, and inflow of investments happened. And in average, these companies are at the level of their growth, but no inspiring growth. And I again repeat that the great seventh countries show nothing inspiring, like the portfolio that showed quite a wide sample. And in that sample, the companies were under significant stress in 2022 and lost significant value. And no doubt now, what would I like to advise to investors? Certainly, there are very many interesting opportunities in fixed yields, and I will not be mistaken if I say that now probably we are moving into the era where the governments would increase their pressure on leaders of productivity because there is a lack of money. Expenditures grew, but taxes are not gathered in a rapid and merry way like they wanted. And now we see that this certainly is a threat to macroeconomy and impacts on inflation. And many countries say about the budget deficiency that will cause inflation, which we see actively in the recent time. And that means that the states will take money from those who, according to the common opinion of the markets, have that money. And probably for investors, it will not be a big mistake to take those who work better than others, and the governments would knock at these companies and think how to take away that money from the companies, as far as the governments need this money. And the budget consolidation is observed in Kazakhstan as well by us. We listen to the message of the head of the state very attentively, where he talked about that as well. And look, I will repeat again that tools of instrumental yields, and I agree again that this is a threat for servicing by companies, and probably in the nearest future for the companies this will not a threat, and the debts will be paid out in an easier way. And leaders of productivity probably will be visited by the governments, and this scares us as far as they will face the more aggressive fiscal policy, and anti-monopoly committees also will be more active. And yesterday the news went out that anti-monopoly investigation was now more active against some companies, and the Justice Department just knocked the doors of such companies, and all the headlines of the business mass media yell how during one day they lost 250 billion USD for capitalization, which is the biggest in the American history, and such kind of events will happen. And that's why, colleagues, be very careful. Even with these great seventh top leaders, they will not be less effective. These are such great companies that learned how to make money for their investors, for their shareholders, but they will face the sharp, tougher regulation policy in the nearest 10 years, and the governments will try to withdraw half of their capital, and we will see such a trend. That's why look for stories that were not considered by anyone. Look wider at investment ideas, and we need to do so. As far as SME will face much less fiscal pressure than the big, most successful business. And that's why look at the successful big businesses, not from the perspective of the basic trends and regulations that are available, but the governments will interfere into such a process and will rewrite the rules of game and will not make the shareholders to earn big money. And that's why investors could pay for such companies big money, and for you these opportunities could be restricted as far as the government will redistribute the money in the economy, and the companies of small capitalization, and it is amazing, will have the investors who will feel difficulties in reviewing the opportunities, as far as not all the companies act for the interests of their minority shareholders. And I will repeat, if you will be able to gather a portfolio in a right way with some high-yielding bonds and bonds of the highly developing countries and with some bonds of small companies, they will face less government regulation, lower taxes, and actually will be able to implement a lot of other benefits. That's why diversify your portfolios. Don't avoid the great seven companies in any way. They will try to earn money, but not for you, probably. And look at those who present the systems, who are effectively moving around them, because it will not exclude that they will earn for their investors much more than those great seven corporations. Maybe they will not be too fast and will not face the huge taxes. And at the same time, I'd like to say a simple thing. The social responsibility becomes a global trend as far as the governments feel difficulties to perform such kind of responsibilities. And if the government has a reliable partner for you and implements ESG principles in a successful way, and companies think about sustainable development, this will create much more favorable conditions for such companies because the demand for such social responsible companies grow throughout the world. And I will repeat once more, the governments feel a lack of money, or they seem to feel a lack of money, and that's why they have insufficient resources, and they will look attentively at the companies who ignore such ESG agendas, and such companies could find themselves in the situation of aggressive behavior from the governments. From the governments, there will be more active tax policies, and the contracts with the governments will be much more tough for such companies. That's why build this harmonic relations with the governments, with the societies, with the communities, which will be successful for you finally. And even in the US, there are opportunities for generation of the political risks.
Спасибо большое. Я думаю, если мы сегодня уйдем...
Thank you so much. I think if we leave this conference with these big ideas, so then the question about earning by the company some specific funds would be considered by everyone. So now I would like to ask all of my colleagues. Actually, the question is the following one. What would you like to say to the practitioner, to the investor who thinks how to invest this money in the nearest 12 months? And I think in the next year, in 12 months, we might check these tips or advices. So I would like to start from Mr. Vladimir Osakovsky. Could you tell us, shall investor continue to choose the same strategy, or maybe now it's time to invest to some local bonds with some risk? So, please. Well, in general, we have a positive view to local bonds of the developing countries, and here we need to do the disclaimer. In the nearest weeks and months, we still have lots of risks. Well, we think that in September, the market will receive enough input so that to form where we're going. And we will understand who will win the elections in the US. And I think based on this data, we might make a decision if it's to buy from the developing markets, including local bonds, or maybe it is better to wait until the situation with these trade wars behave. So let us follow, let us monitor, but our official view, formal view of our bank is that in the nearest weeks, we are waiting for the strengthening of dollar, and there are still lots of uncertainties and lots of divergence. So maybe we shall use risk-free assets. But in the long term, if you want to form your position, then I think you shall revise your thing. Thank you. Thank you so much, Vladimir. Next question to Konrad. Konrad, could you tell, please, in the next 12 months or 2 years, the investor, by opening its portfolio, which is the minimum share of portfolio should be dedicated to ESG? I mean, what would be the percentage? Would it be like 1/5? So 15% should be green, so that investor would feel protected and safe. Any numbers, maybe? Thank you so much.
A slide to present. In the meantime, so yes, I think, well, we have to consider as the coal industry, for instance, and the energy sector in Central Asia, for the next few years, I would say very attractive, as all the countries, they have very strong ambitions to decarbonize their economies. And of course, the electricity and heat generation sector is among the top, among, let's say, 10 countries that right now the bank is also doing co-joint research with UNESCOP. And we're looking across 10 countries in the region, including Turkmenistan, Armenia, Azerbaijan, Tajikistan, Kyrgyzstan, and other countries in addition to Kazakhstan. All those countries, they have electricity and heat generation as one of the main driver for carbon emissions when we look on the sectoral perspective. And in Kazakhstan is one of the most intensive by the terms of coal emissions, of course. So that's also an opportunity for transitioning that industry But as we say in the bank, that's not something that's going to happen from one day to the other on the blink of the eye, because you really have how many people are working on that industry right now. We also have the social considerations of the workforce that needs to be also transitioned step by step. So when we look to an exclusion list from investment perspective or a lending perspective, that's very important to be considered, that it should not be completely phased out in the next day. It should be a transitional phase down. So as we have important projects in our bank, that we support the transition from more polluting or intense high emissions facilities. So we modernize those facilities across the board in the country and in Central Asia and other countries, more members of the bank, even cross-boundary projects that we have. And that's the goal that we have for the next few years, because that's also where we can see the opportunities on the horizon. As I said before, all those countries, including Kazakhstan, they have, and we have here, the objective to decarbonize the economy. So that can also be the first side. That's also opportunities that could be. So which companies will be positioned to finance this movement, and which will also be maybe on the other side of the equation in the next few years, 10, 15, or 20, 30 years, still financing some industries, hard to abate ones, but not helping them to transition. So it's important to ask and transition in the sense of also requiring stronger standards for those companies to adapt with better technologies, more clean technologies, clean tech, for instance, in those endeavors. So in those business opportunities, those projects that, of course, here in the bank, we do finance. So this is one of the points. And yes, in Kazakhstan, I think was part of the question, the country has a very intensive GHG emission, CO2 emissions per capita, but not the highest in the sense of GDP, but the second largest when we consider 10 countries across the world, across here the Eurasian region. Turkmenistan is a little bit more, but Kazakhstan comes in second. It is higher than Russian Federation and Uzbekistan. They're also very dependent on more high emissions industry on the electricity sector. So what the bank has to do here, we have to help those industries to really go for and capture those opportunities. Because before we were talking about more on the risk perspective, so we wanted to identify and spotlight which companies, how they're positioned on their ESG credentials to avoid, if I have this in investment portfolio, what could be the likelihood that this would have a shock and a negative downwards return in the short horizon when some breach may happen and be materialized more acute or more chronically. Depending on the spectrum of ESG, there are more some chronics, maybe some environmental incidents that may happen more in the mid or the long run, although governance factors may be more in the frequency, more in the short term. So you also have to tackle those 2 points as well. But when we consider the energy sector and the industry as a whole, that's how we see opportunities coming more for the investments in the region. I'm not sure if this is working. I don't know if the slides can be on, but okay, as we can continue. So I think this is what we also need to have here. Good partners in the region, like commercial banks, like we have Freedom here. We have other banks as well in the region, not just in Kazakhstan. We have the Green Finance Center as the ESG Club, which is also a very important venue for exchanging the ideas and especially to making the change. So we also going to be asking more those companies and banks to be on the protagonism sphere, to really change their own disclosures, to really follow the path on their own investments, to change not just to be more financing those industries or just not requiring transition on the technologies or to make more efficient, less polluting those business endeavors and the products or services that are provided. Those are very good initiatives that we have to support, and also the bank is doing this across the board. This is our also responsibility that we consider is very important for a region and a country like Kazakhstan. So in a nutshell, I think that's what we should be on our radar. We have to be always, of course, COP is always more in the last 3 ones that happened since COP27 or 26 is on the radar of every investor. But decisions are more on the institutional side or more on the countries, but we also have to go here on the ground. So that's also important to be with the local community, the local banks to support, to get those investments where they are, and we also know where we can also contribute for this. Thank you. Sorry, I think I passed a little bit of the time.
Thanks, Conrad. No, that was very insightful. Thanks, appreciate your ideas. Коллеги, я думаю, что мы, к сожалению...
So, dear colleagues, I think that our time is finished, and I would like to thank all our speakers for sharing their ideas, their visions, their points of views. We got all the information. I think we will be able to make more decisions. Thank you so much. Thank you. Start in about a couple of
Okay, I hope everyone can hear us in the hall.
I can hear you, Alex. I can see you.
Excellent. Okay. Well, my name is Alex Marrow. I'm Chief Companies Correspondent with Reuters News covering Russia and CIS. And I'm delighted that joining me for this session is Jim Rogers, an international investor, financial commentator, author, and world traveler. A little intro about Jim, who graduated from Yale and Oxford universities before co-founding the Quantum Fund in the 1970s, whose portfolio enjoyed a 4,200% return over a near 10-year period, while the S&P rose just 47%. For many years, Jim has now managed his own capital. Jim, thank you for being here. I know we're both dialing in remotely to this session, but given the conference is taking place in Astana, I thought we could start by hearing about your experiences in Kazakhstan. When did you first travel there, and what do you remember about that trip?
Oh, gosh, I have driven across Kazakhstan, I think 4 times, to my delight and pleasure. The first time it was still part of the Soviet Union, so you may remember the Soviet Union. There wasn't much there, but I survived, and it was a very, very, I mean, alcohol was almost completely forbidden in much of Kazakhstan and Uzbekistan and in the stands in those days. But even I could see that things were beginning to change. They certainly could see that things were beginning to change. You know, they weren't listening to Moscow so much. They knew that Moscow had messed things up for a while, and I could see, wow, this is going to be exciting, all the stands.
Yeah, and so I guess safe to say things have changed a little bit since then. And of course, today with the ITS conference, I thought we could maybe start by looking at some of the instruments that people who trade through ITS can use. So potentially US stocks. I know this is something you followed, and I wanted to ask you how long you think this bull run, this long-term bull run, can continue.
Well, I'm going to talk about the US because it's the largest market and therefore the most important market. And in the US, the bull market has been going on since 2009. That's the longest in American history. Never have we had such a long stock market bull run in history. But things are spreading everywhere. Even Japan, which was down for 35 years, is booming now. So the whole world, nearly the whole world, is joining into this move, Alex. And when everybody's having a good time, it worries me because history shows pretty clearly that when everybody's happy and everybody's making easy money, somebody better start worrying. So just because it's gone on so long and in so many countries, I have been cutting back.
So which markets have you been moving into in that case, or which asset classes?
Well, there are not many that are depressed. Uzbekistan I have been moving into. Uzbekistan was one of the Soviet republics, and it was ruined by the Soviets. Uzbekistan has had some glorious history in its day, but the Soviets ruined it. And they're beginning to change. They're making positive changes. The people running Uzbekistan now say that they want to run things the way you and I would do it. Kazakhstan is certainly a place with huge natural resources. I prefer Uzbekistan at the moment. China, of course, is still one of the few major markets that's depressed. I have investments in China. I'm looking for more. I've not found anything recently, partly because I'm lazy or too lazy to find something, but there are not many. I mean, Alex, look around the world. As I said, even Japan, which was down for 35 years, is making all-time highs. America is making all-time highs. So there are not many depressed markets anymore. And I like to buy low and sell high. I know your parents taught you to buy low and sell high. I'm trying to do it.
So how much do you think, or how much harder has it been then to find those investment plays? If you think about 20, 30, 40 years ago, was it easier to find those markets where you could buy low and sell high? And if so, now, what's the best practice for trying to find those investment plays?
Well, Alex, it's never been easy for me. I'm running into guys all the time and they say, oh, in the old days, it was so easy. Everything was easy. It was never easy for me. It's always been difficult. I've lost money in lots of places, lots of times. More or less, the rules are still the same if you want to be successful. If you find things that are cheap, where there's positive change taking place, you might make some money, but you need to know why they're cheap. You need to know what's happening. Is it going, because it could stay cheap. I just said Japan was down for 35 years. You know, you could have started investing in Japan 30 years ago, 34 years ago. You'd still be waiting, or you would have still been waiting. So you have to find a reason to invest in places. And my problem right now is there are not many places that are down where I see positive things happening. I mentioned Uzbekistan, I mentioned China, but, well, I guess Russia. Russia is certainly a place where things are down. But since I'm an American, I cannot invest there. There's a war. But if you are not prohibited from investing in Russia, you might look at Russia because there are vast resources there. Of course, there always have been. The communists ruined Russia too. But there are some markets around where you might find opportunities.
And with that sort of strategy in mind, is your sort of, would you prefer long-term investing then? Is that your sort of key strategy in that case?
Well, it's partly because I'm lazy, Alex. You know, if you're buying and selling all the time, it's a lot of hard work. If I've had any success, it's been mainly from finding things that are cheap, where there's positive change taking place. And when I say change, I mean change that'll go on for a long time. I mentioned Uzbekistan. I mean, it was ruined by the Soviets. If those changes that are taking place are real, they will probably last for a long time because the place was ruined for decades. That's the kind of thing I like to find.
And so then
I will hasten to tell you before I stop, partly because I'm a horrible short-term trader. You know, it's hard work to be a good short-term trader, and I've learned I'm not so good at it.
And so maybe a slightly more sort of bit of practical advice, but I wanted to sort of see what you'd think if you had to create today a portfolio of 3 US stocks, which 3 would you choose and why?
US stocks, did you say, or
Yeah,
stocks?
US stocks.
Oh, I cannot think of, I don't own any US stocks that I can remember. I would mainly probably buy ETFs. I would buy agricultural ETFs. You know, I would try to find a basket. Investing in baskets of stocks is usually a good way, certainly not a bad way to invest. So if I were going to invest in the US, I would find agricultural ETFs. That was probably where I would start. I know that's where I'd start. I'm not sure where I would go from there.
And
Maybe silver, maybe silver.
Okay.
Silver is depressed.
Maybe we'll come back to agriculture and commodities a little bit later, but in terms, I would want another tester question. But again, if you had to put money in stocks, then you could choose the New York Stock Exchange, the Nasdaq, or Hong Kong. Which of those would you choose and why?
Well, the Nasdaq and the New York Stock Exchange are at or near all-time highs. China and therefore Hong Kong are somewhat depressed. So I would go to Hong Kong.
Okay. And also just one other stocks question on technology stocks. I think the sort of rise of some of those stocks has been quite astonishing in the last decade or so. And again, you talk about these all-time highs. Do you think that those stocks can continue rising even if perhaps other stocks struggle, or is the market going to be dictated by those heavily weighted tech stocks ultimately in the US?
Well, Alex, for whatever reason, partly because I'm old, I have seen this before and I've read about it. Believe it or not, there was a time when railroad stocks were so unbelievably hot. They couldn't stop going up every day. And if you look back, some railroad stocks never sold as high as they did in the boom 150 years ago. We still have railroads, but the stocks just didn't sell like that. Electricity at one point was wildly hot, a wildly exciting market. Television, computers, I can remember in the late 60s, there was a laundry on Long Island that changed its name to computer. Laundry stock went through the roof. It was still a laundry. So this is not the first time this has happened, and I hope it happens many, many more times, certainly in my life, and it will in history. So I am a little skeptical and leery of things that are wildly hot and wildly popular, whatever the technology, because it has happened before, and I would just be careful if I were an investor.
And then kind of just slightly comparing Chinese tech stocks, those sort of Alibaba, Tencent, to these American stocks that have been leading the way. How do you see those comparing in terms of risk reward? Do they still have sort of more to go, or would you apply the same advice in terms of being very wary of a stock that's so high?
Well, the Chinese companies you mentioned, from what I know, have been successful enterprises. They've been run by smart people who know what they're doing. Yes, the stocks have gone up a lot, but nothing like what has happened in previous technology booms. So if I were investing in that area, I would prefer the Chinese technology stocks to US technology stocks.
Okay. I think we've covered stocks quite well. Of course, if anyone who's watching wants to submit any questions, then please do, and we can try and put them to Jim. But you mentioned, of course, agriculture. How have you found agriculture to be as an investment play over the years? You seem to have come to sort of enjoy investing there and find it quite a fruitful, excuse the pun, market. How do you sort of sum up your sort of history with agriculture investment?
Well, Alex, agriculture has been pretty much a disaster. I'm sure you're well educated, but I doubt if anybody you went to school with became a farmer. They all went to London and became technicians or whatever they did, because agriculture has been so horrible. You know, the average age of farmers in Japan is 68 or something. I mean, it's ludicrous how bad agriculture has been for most people in the last few decades. That doesn't mean it's going to be good, but it usually throughout history, agriculture has a long bad period and then things start changing and agriculture becomes a very exciting place to be. And you see young people saying, oh, I'm going to be a farmer because all the farmers are driving Mercedes and I want to drive a Mercedes too. Eventually, the farmers will not be driving Mercedes again and it'll be a bad place. But as I look around the world, most the Heavenly Seven in the US are all selling at all-time highs or very, very high prices. You cannot say that cotton is selling at a very, very high all-time high. And that's true of most agricultural products. Doesn't mean they're going to go up, doesn't mean anything. I'm just saying I'd rather look for opportunities in things that are down than things that are up.
And I mean, do environmental concerns play much of a role in your strategy as well in terms of agriculture?
Well, not much. Of course, I have to be aware of it. Everybody has to be aware of it, whether you think the environmentalists are right or fools. No matter what you think, you have to be aware of it if you're an investor, and you have to take that into consideration. So my answer to you is yes.
Mm-hmm. And then another, I guess, big elephant in the room, and particularly in the last few years, has been sort of geopolitics. I think there's been rising tensions in the world in the last few years that we've seen, particularly with, as you mentioned, the war in Ukraine, and then obviously with the situation in Gaza as well. How does that impact your sort of view of investing, but particularly in terms of commodities?
Well, in my experience, normally if you invest in a country, a reasonably sound country at war, you're probably going to do great over the next few years. Not the day the war starts, but after the war has progressed for a while. Iran, for instance, might be a very interesting and exciting place to invest right now. I'm an American, so I cannot invest in Iran, but most of your viewers probably can invest in Iran, and it's certainly not on everybody's lips because they've been through pretty dramatic changes. So Iran would be on my list. It is on my list. I'm not doing anything because I cannot. But if you can find, or Ukraine, Russia. I mean, I have invested in Russia in the past. I obviously am not rushing out to buy Russian stocks right now, but some of your viewers can. Russia has vast resources, and it might be an interesting place to invest, partially because of the war. I'm not advocating war. I'm just suggesting to you that history indicates that if you invest in a country at war, especially near the end of a war, you're probably going to do well.
Mm-hmm. With that in mind, do you see particular regions or countries? I know you've mentioned China already, and obviously Uzbekistan, but as being sort of the next sort of big economic drivers. Obviously, Uzbekistan is a smaller country, but how do you kind of have picks for those potential big markets that could be the place to be?
Well, big markets, most big markets are at or near all time. I mean, India is a potentially new big market, but it's making all-time highs. Doesn't mean you shouldn't invest if you know what you're doing. I am not investing in India, but it is a big market where there have been dramatic changes taking place. So that's the sort of place that might be interesting to people. Venezuela or Colombia is a better, Colombia had a many decades civil war. That seems to be ended. That might be an interesting place for people because it's not on everybody's lips. At least it's not on everybody I know's lips. So Colombia, Iran, places like that might be Russia might be of great interest to some people. I prefer Uzbekistan because I don't have any restraints in Uzbekistan, but some people might. And Kazakhstan is a country that's, it was an old Soviet, one of the Soviet countries, ruined by the Soviets, been making dramatic changes, huge natural resources. So that might be a place of interest to some people.
I think a lot of the markets you've mentioned would be classified in some way in terms of emerging or developing, but certainly probably higher risk markets than those in the West historically. I don't know if kind of ongoing inflation concerns and sort of slow growth that is sort of hamstringing Western economies generally means that element of risk has shifted at all. Do you find that there is still good value to be in Western markets, or is your move much more away towards emerging ones?
Well, part of the situation, as you alluded, is that most, quote, Western markets or bigger markets are happy. Everybody's been buying. They're all high. The Japanese market is making new highs after 35 years of being depressed. The US market is making new highs. So most of those kind of markets are being exploited and people are investing there and the stocks are high. This may be a unique period in history when we will look back someday and say, everything or nearly everything was booming. And that hasn't happened many times in history, Alex. It has. And most of the time when everybody's making a lot of money, somebody should start worrying. At least that's my experience, my both personal experience and reading history. Mm-hmm. It is better when everybody's unhappy, when everybody's depressed, when everybody cancels their subscription to Reuters and says, I don't need it anymore. That's what you should look for.
Mm-hmm. Yeah, that would be a slight risk, I'm sure. I mean, are there specific countries or regions that you would rule out completely or never invest in? I mean, obviously there's some that you can't invest in, but are there regions that you don't look at?
Well, I mean, North Korea, partly because I cannot, but even if it were illegal for me to invest, I don't think I would invest in I know I would not invest in North Korea now, but it's changing. I can see things changing there. So, and they don't have a stock market, but maybe someday places like that, the more pariah they are, usually the more interesting they are as a place to invest if you can get your timing even remotely right. I am not doing anything in North Korea. I cannot. There is no stock market, but I'm just using it as a potential example. Iran has a stock market. Iran would be a more likely example. It's a huge country, 100 million people, vast resources, lots of young people, and young people usually like change. They don't like the old ways. They don't want to walk around with veils, etc. So Iran might be a better example. I'm not investing in Iran, partly because I cannot, but that would be the kind of thing.
Mm-hmm. I wondered if we could move slightly on to sort of more practical advice that you may have and sort of looking back at some of the biggest successes and perhaps mistakes that you've made in your investing career. Can you think of a particular, maybe let's start with a mistake that you could remember making and that may have influenced the way that you invest in the future?
Alex, you want to hear about my first wife? You know, what a horrible mistake that was. But one of the things it taught me was don't jump into things or be very cautious of anything. My investing, in my early investing days, I had phenomenal success. And I really started thinking, this is easy. I'm going to make a huge fortune as an investor. Of course, a few months later, I lost everything and had to start over. It was the same sort of thing. In those days, I understood the stocks I was investing in perfectly. In fact, I sold them short and they all went bankrupt. But I lost everything first because I had not factored in other people. And I thought everybody knew what I knew. But one thing, if you're in the market, you have to learn that there are a lot of people who don't read Reuters every day and don't know what's going on. And so they will make foolish mistakes. That was a hard lesson for me to learn, a necessary lesson for me to learn, because no matter how smart you are and how much work you do and no matter how right you are, you have to you have to be aware of everybody else.
Mm-hmm. And when you say that you lost everything at that point, was that on a basket of investments? Was it a specific stock?
Well, no, it was specific. I mean, I don't want to sound like, no, I know there was a time when I made a lot of money selling short in the markets, actually buying puts, and I tripled my money in 6 months when everybody else was losing everything. Covered my puts, sold my puts on the day the market made bottom. So you see why I thought it was easy, because I was doing so well. I waited a few months because I knew the market would rally. Sure enough, it did. And I started selling short. All the companies I sold short eventually went bankrupt, but I lost everything first. If you sell short, you have to be aware of the margin clerk, because if the margin clerk calls you up and says, Mr. Rogers, you have to made a margin call. And you can tell the margin clerk all day long, don't you understand the fundamentals? Don't you know I'm right about this? Don't you know these companies are going to go bankrupt? The margin clerk says, well, that's all well and good, Mr. Rogers, but you have to meet this margin call no matter what. And if you don't meet the margin call, we're going to meet it for you. So these were things I just did not have enough experience or knowledge or whatever you want to call it to know that markets can do strange things. I mean, what was his name, the guy in the 30s who said something like, markets can stay irrational longer than you can stay solvent. Well, I learned that. It was Keynes. Keynes said, markets can stay irrational longer than you can stay solvent. I guess he knew about me. He knew the mistakes I was going to make.
Yeah, maybe you've seen ahead into those mistakes, but you obviously have had, I think it's safe to say, more success than failures over the years. Can you think of a moment of success that was particularly, perhaps even surprised you, and then also informed your future investing, or a particular favorite sort of moment that you had?
Well, you mentioned a time when we had great success, and that was one of those times in that decade. The Dow went up 40% or something. We went up 4,000% or something. So yes, and it was at least partially because I didn't know you weren't supposed to invest in certain kind of stocks, but all I knew was they were cheap. There were good things happening, and maybe we'd make a lot of money. And we did, because I was too dumb to know that you shouldn't invest in those stocks. And that specifically in that case, although there were many others, but I'm thinking of defense stocks in those days. You know, defense stocks at one time, especially after the 1960s in America, nobody would even discuss defense stocks. If you told people at a cocktail party you own defense companies, they'd leave the room. They didn't want to have anything to do with somebody during the Vietnam War or whatever the reason was at the time. There were stocks that were just socially incorrect, politically incorrect. And that is often a good sign of a place that maybe you should be doing some research.
The places where others aren't looking or that are considered not a great place to invest is actually somewhere that you should be looking.
Well, in my experience and my readings of histories of markets and of investing in markets, that is usually the case. If there's an industry that's cheap, usually there's a reason it's cheap. But if you can do enough research to realize that the reason is changing, or it's not always going to be the case, you might make a lot of money because nobody wants to buy those stocks, and that makes them cheap. If you invest in a company just because it's cheap, you might not make money. It might stay cheap for a long time. You have to find a reason to invest in something that is cheap.
Okay, and then let's imagine that we have someone who's just starting on their investment journey. Say they've got $5,000 they want to invest. Starting today, what would be the best way to deploy it to build wealth for the long term? Would you suggest?
Go to the beach and sit at the beach and drink beer or Coca-Cola or something. I mean, the point of my answer is, please don't start thinking that this is easy. Don't start thinking this is an easy way to make money, because it's not. And if you're going to be an investor, please start and stay with what you know a lot about. Everybody knows a lot about something, whether it's fashion or cars or something. So if you stay with what you know and focus on what you know, I mean, if I told you you can only have 25 investments in your whole life, you would be very careful. You wouldn't jump in and out of things. You wouldn't go down to the restaurant and hear hot stories and jump in and out. You would be very, very careful about what you invest in. And Alex, you'd be a successful investor. And if people tell you that's boring, be boring. Don't worry about being boring. You want to be a successful investor, don't worry about being boring. Don't, the main thing I would tell that person with $5,000 is stay away from hot tips. Never, ever invest in hot tips. Hot tips will ruin you.
That leads me
Even
nicely
if they're from Reuters. Even if you have hot tips from Reuters, be careful.
Well, yeah, I was going to ask as well, if you could pick one asset to buy now and hold for 10 years, what would it be? But that may constitute a hot tip from Jim Rogers. So I don't know if it should be something people should ignore or listen to. But what would you say to that?
Well, one asset, you said. You didn't say
Yeah.
one stock. I would say, well, an easy one would probably be silver. Everybody knows what silver is. You don't have to do too much education. And silver's down, what, 45% from its all-time high. And in the, you said 10 years, there are unlikely, I mean, there are undoubtedly going to be things in those 10 years that would make silver an attractive investment. So I would say, I'm not going to tell you Microsoft or something. I would say, tell you something that's somewhat depressed, and silver might fit that bill.
Mm-hmm. And you mentioned to me previously about gold being at all-time highs, but obviously gold is sort of the mother of all safe haven assets. I mean, do you think it deserves that? Is that still the sort of a sensible play? And obviously there's a nice contrast with silver, but what are your thoughts on gold at the moment?
Well, you said something I didn't like, you said safe investment or safe something. Alex, in my experience, there's no such thing as a safe investment. Nothing is safe in the investment world, I promise you. I have lost enough money in my day to know that nothing is safe. But yes, gold is certainly has been at times a wonderful place to have money, and I do own some gold. I'm not buying it right now. Silver, as I said, is down 40%. And often in history, investing history, gold and silver move somewhat together. So as I look around the world, something that is accessible for most investors, that is cheap and might be good for 10 years, I would say would be silver.
And are there, in addition to silver, I mean, other commodities or metals that are of interest? I mean, particularly as thinking of industries like electric cars, there are certain rare earth metals that are becoming more, I suppose, valuable in terms of those industries. Do you have any other thoughts on metals?
Now you're trying to get closer to hot tips. And I mean, yes, there's some certainly dramatic things taking place. For nickel, for instance, electric cars need huge amounts of nickel. And I mean, if you go to Indonesia, there's a lot of cheap nickel for many reasons right now. But without most of things like that, I anyway would have to get into lots of technical things that are happening in those markets, such as electric cars or whatever you want to discuss. But for me, the simple one for most investors would be silver. Now, if they have time and knowledge to start looking at some of the base metals, there's some dramatic things that we all know about electric cars. Even I know that we're all going to have electric cars someday. So if you can find the metallic ways to play electric cars and you know what you're doing, you learn what you're doing, you might make a huge fortune.
One thing we haven't really discussed so far is cash. I'm asking slightly because of, as I cover Russia, and Russia has been talking a lot about de-dollarization and this idea that that the dollar is going to be used less and less in global markets. It's obviously still the world's reserve currency. Do you see that changing anytime soon? And for markets like, I suppose, BRICS countries that may be looking at a world where the dollar could be less significant, do you think that those sort of expectations or hopes are based on any kind of likely reality?
Well, I own a lot of US dollars and I am an American citizen, but I am looking for the time, I presume, when there will be one last burst or maybe another burst in the upward in the US dollar. And I'm afraid I'm going to have to sell it. And the reason I'm going to have to sell it because Washington seems to be doing everything they can to drive people away from the US dollars. I don't know if it's ignorance. I don't think it's because they purposely want it to happen, but the US is the largest debtor nation in the history of the world. I can go, and it's getting worse every day. Political reasons, some countries, the Iranians, they use an example. The North Koreans, there are countries in the world where they cannot and will not use US dollars, but that means that many people are looking for competitors, and even our friends, even America's friends, are starting to say, wait a minute, they might do something to us. So we have to find something that's more neutral that can compete with the US dollar. So for many historic and current reasons, I am looking for what's going to be the next competitor to the US dollar. I have not found it yet. I assure you I'm looking all the time, but I don't know yet, but I do know that Washington is consciously or unconsciously making it difficult for many people in the world to use US dollars. I don't like it. That means if other people are going to use something else, I have to find it too.
Yeah, I mean, particularly we've seen that with Russia losing access to dollar and euro markets. do you think that the sanctions that have been imposed stopping the use of those currencies have sort of increased the likelihood that there will be this move away from the dollar? And obviously the ruble is not particularly a particularly good option at the moment, but Russia trades in yuan. Do you see that as a potential option? And how do you evaluate these kind of not hugely convertible currencies and their role in a future sort of post-dollar world?
Well, to repeat, Washington is making it imperative that many people, including our friends, find a competitor because it could happen to them any day. And it has happened to many countries. We were great pals with the Russians 20 years ago. I'm not sure people would say, I know the ruble. Let's put it in rubles. Maybe they should, but it's not on everybody's list right now. China, in theory, should be the next great country, our next competing currency. Unfortunately, the ruble is, the yen, the yuan, renminbi is a blocked currency. So it's unlikely that people will use a blocked currency as an international currency. Maybe someday, but not now. So there are potential competitors out there, but I anyway think I have to be careful because most of them have a potential problem. And if they have a problem, I would have a problem. I'm not particularly interested in problems. And I do not know a new US dollar at the moment.
Okay.
I'm looking daily.
Yeah. And what about cryptocurrency? Do you invest in crypto? Do you see any benefits from that? Or is it still a market that is too opaque?
Well, I have never bought nor sold short a cryptocurrency, partly because I never saw any rational reason for cryptos. I mean, yes, they're have been great trading vehicles. Some fortunes have been made. Some have gone bankrupt and disappeared already, as you know. But I don't see any reason, practical, rational reason, in my view, for why any country would use crypto. Maybe their own computer money. The US and everybody else is working on computer money, but that's different. I mean, you go to China now, you can't take a taxi and give them currency. You have to use crypto money for the most part. So many countries are working on it. Some are ahead of others. And it's going to happen, but I don't know what the new universal cryptocurrency is yet. And if you know, don't tell me, send me an email, private email later.
Yeah, smart. Keep it.
But I mean, Alex, a lot of people have made a lot of money trading cryptos. More power to them as far as I'm concerned. It's just not for me.
Mm-hmm. Yeah, no, absolutely. Just to move back around to sort of ITS, who's hosting the conference. ITS is obviously a relatively new player and growing quite quickly. Which foreign markets do you think it will be best for ITS to give access to, particularly as it positions itself as a kind of link between European and Asian markets, given the time zone?
Well, they certainly would know the stands certainly better than I would. So if I were they, I would be looking at the stands with both feet. Other countries that at the moment, I mentioned Iran. I mean, I don't think the Iranians are going to have anything against the Kazakhs. I don't think they're going to spit in each other's eye. So there are countries in the world where positive things are taking place. And Kazakhstan doesn't have many enemies that I know of. So if I were and they have, they're in a neighborhood with a lot of potential successful countries, that's where I would be looking. And if people say to them, what are you talking about? Nobody likes Iran. I would double up. I would send more people to start looking at places like that. Because over the scan of history, there have been many countries that were pariahs that everybody came to love. And if I were Kazakhstan, that's what I would be doing.
And what about slightly further afield, somewhere like Turkey as well, or even much further afield? We haven't really touched much on like Latin America.
Well, you're exactly right about Turkey, and Turkey is going through and has gone through some dramatic changes, and that's the kind of place that probably would offer great opportunities for Kazakhstan. And they're not enemies, as far as I know, but certainly Latin America. I mean, look at Colombia, look at Argentina. I mean, Argentina's had its problems. Maybe this new guy is going to save Argentina. Look at Africa. There are certainly some countries, and Africa's got over 50 countries, so there's certainly going to be some success stories. And if I were Kazakhstan, I would be on planes around the world looking at potential success stories. I wouldn't be looking at the known success stories. I wouldn't be looking at Germany. I would be looking at France, Italy, you know, places like that. I would be looking at places that don't have many friends right now, that might have a lot of friends someday. You know, at one point, Venezuela was the richest country in South America. I mean, people don't think of Venezuela that way now, but if I were Kazakhstan, I'd go over and knock on the door, see what's happening.
Yeah. And one other just like asset class that I wanted to touch on was debt. So in the United States, there's been a lot of people have been quite critical of debt, but it just keeps growing and growing. As an investor, how do you sort of tap into that and benefit from it?
How do you tap into it? Well, eventually I own a lot of US dollars, I told you. Eventually, I'm going to have to sell them. I remember 100 years ago in 1924, Britain was the #1 country in the world, and the pound sterling ruled the world. 50 years later, only 50 years later, 1976, Britain was bankrupt. IMF had to fly to London and help them pay their bills. That happened in only 50 years, 5 decades. So I know this has happened before. So I would certainly I am looking around to see where else I can find competitors to the US dollar. Because Alex, if you look at the numbers are staggering. There is no conceivable way that the US is not going to have a huge problem in the foreseeable future. I have 2 teenage girls. In their lifetime, the US is going to be huge problems for them. They're US citizens, they own US dollars, go to schools that charge US dollars. But I can remember when it was almost impossible to be a British citizen and be a tourist, because you just couldn't take your money because there were so many controls. And that was a country that once was the richest in the recent century, was the richest, most powerful country in the world.
I think I've read you previously have said about 100 years ago, the place to be was you moved to London if you were smart. About 50 years ago, you moved to the US if you were smart. And in around 2007, you moved to Singapore. Will you be moving again soon, or?
Oh, Alex, I hope, I'm getting older. I'm older than you. I hope I don't have to move again. But, and certainly, I mean, Singapore is a wildly successful place, and it's been very well run for a few decades. So I hope not. But I do know enough to know that things change. People do make mistakes. And if you're smart, you have to change with the world, or you're going to get swept up and being crushed like other people. I have mentioned some potential success stories. I mean, I wish I could do something in North Korea right now. I see that not this year, but I do see it as a potential success story down the road. for some of the reasons I think changes potentially taking place there. I have learned, like with stocks or commodities or anything else, if you look at the things that are really despised, that's often an opportunity. Not always, but often.
And we started off the session talking briefly about your travels in Kazakhstan. Do you have any other traveling plans like that? Any bike trips or plans to maybe return to Kazakhstan someday?
Well, yes, I drove through Kazakhstan 2 or 3 times, I guess, and had fun. And it was a beautiful and gorgeous place with gigantic changes taking place. I mentioned Iran. I mean, I cannot do Iran right now, but, you know, Iran's got lots of young people. And as you know, young people don't like old people and what they do, especially when the old people try to constrain them. So there are countries, I mean, Iran has had gigantic success in its history, probably will again. And there are other countries like that. I mentioned a few. I mentioned Colombia. I mentioned, I mean, you mentioned Turkey, and I'm glad you did. Turkey is potentially one of those countries again. But, you know, 3 or 4 years ago, Turkey was absurd, which is a good sign for potential investors. You know, they were saying things like interest rates don't matter, and it doesn't matter how much money we print, et cetera, et cetera. They were literally saying that at the highest levels, and they meant it. I mean, they're not saying it anymore. They realized somebody took them aside and said, you're crazy. But if you can find places like that where there is big change coming, you're probably going to have success.
Great. And just lastly then, I think a lot of our audience today has been investors who are looking for tips and inspiration from an investor like you. And I know that you've given some great advice throughout this session, but maybe you have a final word of wisdom for those watching.
Well, my first advice would be careful, because that's not as easy as it looks, but there are huge developments, positive developments taking place in the world. And the more awkward the country is, the more likely you can find a good success. And I've read enough history, I've been investing long enough that no matter how absurd something seems right now, if you wait, it's going to change. And it will probably be a very exciting investment at some point. And if you go down to the restaurant or to the bar and everybody says, what is wrong with you? You're a fool. How can you invest in that? How can you even talk about it? Double up and then call me. Because I want to know about it too.
Great. Well, Jim, thank you so much for your time and so many illuminating insights. I think we are just approaching the end, so we will leave it there. But thank you very much for being here, and thank you to everyone for listening and watching.
Well, Alex, thank you. And I want to say again, Kazakhstan has been a phenomenally successful country at times. It seems to be moving that direction again. The other stands are too, but there are many opportunities out there in the world right now. So try to find the obscure and hated countries and industries, and you might find some success.
Thank you, Jim.
And read your Reuters so you can find out what's going on.
Absolutely.
Thank you.
Thanks. Bye-bye.
Социальная инвестиционная платформа PyDax объединяет инвесторов для обмена мнениями и повышения уровня знаний. Подписывайтесь на других участников, следите за портфелями опытных инвесторов, обменивайтесь идеями и обсуждайте стратегии в режиме реального времени. Анализ и обучение. Освойте основы инвестирования через встроенную академию. Быстрый старт. Открытие счета занимает пару минут. Минимальный порог входа и комиссии от 0%. Торгуйте американскими ценными бумагами прямо из приложения. Быстрая и простая покупка ценных бумаг за пару кликов, используя лимитные и рыночные ордера. Оценка компаний благодаря кратким описаниям и финансовым показателям. Пайдакс – простое и доступное инвестирование для всех.
Invia Investments – единственная брокерская компания в Армении с собственной технологической платформой и сервисами. Invia предлагает прямой доступ к американским и гонконгской биржам, продвинутый торговый терминал Astras, торговые стратегии от экспертов, Open API для продвинутых трейдеров и финтех-сервисов. Преимущество терминала Astras. Доступен в браузерной и в мобильной версии. Технический анализ TradingView, скальперский стакан, арбитражная раздвижка, связанные и стоп-заявки, синтетические инструменты. Мобильное приложение с торговыми стратегиями. Автоследование. Следуйте за стратегиями экспертов. Персональные торговые идеи. В зависимости от вашего инвестиционного профиля, ожидаемой доходности и склонности к риску. Invia Investments – надежный проводник в мир инвестиций.
Good afternoon, distinguished colleagues, all who are in our room and who are online with us. I think that this will be the most interesting session. Let us go down from the heavens into the earth. Those who kept track of both two sessions before us thought that everything was interesting, but these were macroeconomic forecasts from which you may just could make a conclusion. Nobody knows anything. For me, from Jim's session, understood that you need to be careful in such current conditions. But this is again a view from the helicopter. Let us go down into the earth and talk to the people who on a daily basis keep track of the market, monitor it, and create investment portfolios and manage them, and relatively are those guys who know most of all what is happening around. But disclaimer is that all ideas that are pronounced today will not be investment ones. They should be filtered, analyzed, and everyone makes decisions for themselves by themselves. And let me introduce guests who participate in this session. And relatively, we will have two foreign guests. They will be online with us. They are Ms. Clara Zhao, CEO of the Institutional Business in Asian Pacific region in China in Value Partners Company. And there will be Mr. Eddie Tam, founder and CEO and main investment director in the Central Investment, which is multi-profile investment company with offices in Hong Kong, Shenzhen, and Shanghai. And our guests who are here with us, these are Eldar Shakenov, who worked in many financial institutions like ABN, AMRO, RBS, ASBC, HSBC, and now he is an analyst in Freedom Finance, Freedom Broker Company. Then Sultan Jumagali, director of the Analytical Researchers Department in BCE Invest, who has multi-sided experience as analyst and portfolio manager and dealt with assessment of Kazakhstani companies, Astana Air, Kasmunay Gas, Kigok, and etc., valuing them in their times. And we think that from him we may take from a lot of interesting information about AI and so on. And today, probably we will be talking on AI all the time, especially pay attention to this aspect. Then Ilyas Mukazhanov, leading analyst in Central Securities Management Department, started as analyst his career. Now he is PIFA assets manager. And if initially he dealt with Kazakhstani companies, now he has switched into the assets and stocks of foreign companies. And Azat Atibay, founder and managing partner in OED consulting company. And what is the interesting point of our session today, Islamic bonds, which are opportunities not only in the US market. And it's clear that US market is very interesting. We can talk about that endlessly, but we will not talk only about US market. We will talk about opportunities in other markets and countries. But this will be our dessert. We will initially start with our guests who are online, as well as talk on Hong Kong, which are the opportunities in Asian Pacific region. And we would like for the dialogue to invite Claire Zhao, who is the CEO of Value Partners. And if you can know anything about that, this is a company that manages 3.5 billion USD, very powerful player in the market. Ms. Zhao, good afternoon.
Thank you so much for inviting me to join this this forum, and thank you so much for the organizer and for the audience here today to spend the time to talk about the investment. So maybe let me spend a couple minutes to talk about who is Value Partner and also what kind of investments that we're currently doing. So Value Partner is one of the largest Asia-based asset manager, independent asset manager. Currently, our investment portfolio managed over $5.3 billion. And we are founded in 1993 by Mr. Datu Seri Shechinghai. And so far, we are the first asset manager company listed on the main board of Hong Kong Stock Exchange since 2007. Currently, we also have a headquarters in Hong Kong, and meanwhile have the other 6 offices in Singapore, London, Shanghai, Beijing, Shenzhen, and also Kuala Lumpur. And our investment portfolio currently investing in the equity, fixed income, alternatives, multi-asset portfolio, and the alternative quantitative investments as well. So we are very well known by our Greater China equity and the fixed income strategy. Meanwhile, we also expanded our investment capability and also expertise into the whole APAC region. Our strong investment capability across this region will ensure us to meet the demand for both institution and also retail investor globally. In terms of the investment profession, investment team, they are very talented and also very stable. Our senior investment staff have an average over 23 years of industry experience and also over 14 years at the Value Partner. So what differentiates us from the other asset manager in Asia-based is that most of the team member, when they join the firm at the beginning of their investment career, and now some of them work at the top management at the Value Partner. So that's a little bit introduction for the firm.
Спасибо, госпожа Клэр. Можете вы рассказать, собственно, что интересного и какие преимущества связаны с тем, что можно инвестировать в гонконгские акции и вообще в рынок Гонконга и Китая?
Sorry, I cannot hear the translation.
Плохо слышно перевод. what are interesting investment opportunities in Hong Kong stocks and China markets, Hong Kong and Chinese markets?
Okay. Yeah, so that's a very good question. And also, I want to share some of our house view here. And the first is that Hong Kong equity market remain one of the largest in Asia. Okay, good. And also currently ranked number 5 in Asia Pacific region, and also number 8 globally. Currently, the Hong Kong equity market has a total cap over $4 trillion and over 2,000 listed company on the main board of exchange. It's very highly liquid, daily liquidity, daily turnover, acting over $10 billion. So the investor do not need to worry about any liquidity issue. And also most of the stock actually trade in Hong Kong dollar. So Hong Kong dollar, as you probably know, is highly pegged with the US dollar. So it will be used as the proxy for the US dollar. And also Hong Kong dollar is, pegged by the US dollar 430 billion currency reserved by Hong Kong MA, which is the Central Bank of Hong Kong. And also Hong Kong equity market is considered as the only location when the foreign investors want to invest into China equity A share through the stock connection program. There are over 4,500 stocks in the stock connection program from both Shanghai and also Shenzhen Stock Exchange. So most of the foreign investors consider Hong Kong as the gateway to investing into China. If you are talking about some of the investment thing and the several sectors, maybe I can share currently based on our house view. We consider 3 key category or sectors that Hong Kong market currently a lot of investors are interested in. One is the dividend investing. So there's a lot of company listed on the Hong Kong Stock Exchange, with the very strong business profile and also free cash flow that support a healthy payout of the dividends. Given the impending interest rate cuts by the US Fed, we expect the demand for this dividend stock to increase and also their valuation to improve. And this also includes the sectors which are domestically in China and also Hong Kong focus, such as rates, utility, and also some telecom names. And the second thing is about the mainland China SOE, the state-owned enterprise. By the same token, many of those Chinese SOE has delivered very strong return this year, mainly due to the fact that the recent 9-point guidance from the Chinese government is focusing on deepening the reform of those companies, especially to focus on the improving the shareholder return through the increasing dividend payment. There is also a proposal to reduce the withholding tax rates from the onshore investor into H share from 20% to 10%. So if it is implemented, it will reduce the valuation gap between the A share and also H share. And the third sector that we're currently closely looking at is the selective consumption and also the technology company. As you probably know, those retail sales and the consumption remain relatively weak. There are still some area where that we have seen the very impressive earning growth, where the bargain shoppers are very willing to spend the money. Technology-wise, despite all the geography noise, there's still quite a number of Hong Kong listed Chinese company which are well integrated into the technology supply chain, which will continue to gain the market share and deliver very strong and solid earnings. So they will be very, maintain the competitive both on the cost and also on the technology side. So we actually believe, through the investment in the research and the development, this will continue to deliver the shareholder value. especially given the valuation are cheaper than a few years ago.
Thank you. And I have a question. Hong Kong recently does not make investors very happy. If we look at the index versus the American markets, you said that we need to pay attention at the technological markets, stocks, first of all, but taking into consideration the situation in China, construction companies, financial companies, whether they are interesting or not, apart to technological industry, what else we could pay attention to? Or maybe we need to switch to ETF. As far as Hong Kong is very popular with a big number of ETF, maybe we should not look only at one company, but at assets or stocks of some companies. Tell a few words about that.
Yeah, thank you. Thank you so much for the question. Yeah, so if you look at first, maybe I will talk a little bit on the valuation perspective. And a lot of investors like to compare the valuation of the Hong Kong equity market versus US. So with the variety of the reason, the market valuation of Hong Kong remain very low. For example, currently the PE of Hang Seng Index just 10, which is much lower than the other developed market. For example, like S&P, which is like 27 right now. So although some IPO activity in Hong Kong has been coming down, but Hong Kong Stock Exchange remain the main destination of the listing for the innovation and also growing company from China. And the other instruments that the investor probably can look at it is about the ETF. As you mentioned, ETF is one of the very easy and the very liquid proxy that most of the investor can easily get, and also to get a market exposure. A Value Partner is also one of the significant market player in the Hong Kong ETF market. This market growing very fast, so does as the other region of the global ETF as well. But what we see is that recently there's a lot of active ETF have been listed, not only in Hong Kong, but also globally, with many of the transition active manager tap into this ETF market with the active or semi-active manager strategy. And also ETF as the form of the investment vehicle provide some of the investor with the tax efficiency, very transparent, the ease of the trading, and also the additional liquidity that will provide is likely to see the further gain of the popularity going forward. Another point I want to mention is that in Hong Kong market, ETF Connect program is probably one of the very unique program in Hong Kong which connect the mainland China. So this ETF Connect program allow the investor in onshore China market to buy into those overseas ETF listed in Hong Kong. Currently, there's still some requirements on the percentage of the stock exposure to Hong Kong equity, but we believe those restrictions will be evolving to allow the further foreign assets, which can ultimately help the domestic China investors to achieve the better global diversification and also the asset allocation. So, but in the global markets, there's a lot of investors, like a lot of ETFs, over thousands of them. How we, give some advice to the ETF investors when they choose from such a wide range of the lineup. We will say that maybe the most important thing is to look at the cost and also the management of the ETF. We should look at the total expense, the size, the liquidity of the underlying, the liquidity of the ETF itself, and also the strategy. compare, and also the comparison of other available option is very important as well. And the other advice is that we try to tell the investor, try to avoid investing into the ETF, which are too niche. The investment scope are too narrow, and also with a small size. As the low profitability of this ETF might mean that the provider might not want to, keep those vehicle for the long term, and the investor may be forced to exit. So those are the key points I want to share about the Hong Kong market and also the ETF. Thank you.
Большое спасибо.
Thank you very much. Unfortunately, we do not have lots of time. We would like to thank you for such interesting and useful for all of us information, and we hope that we will meet you again soon. Thank you so much. Thank you.
Thank you. Thank you so much. Thank you.
Так, теперь мы поговорим.
Now we will talk to other online speaker. We have Eddie Tam, who is a founder, CEO, and Chief Investment Officer of Central Asset Investments, a very interesting company, multi-profile investment company, managing fund, Central Global Funds was recognized as one of the best, and in 2013 it was the best global fund according to Bloomberg, and it is one of the best Asian funds. And now we will have all the opportunities to talk to Mr. Eddie Tam. Hello, good day.
Okay, thank you very much for inviting me, and very nice to meet you all here.
Господин Там.
Mr. Tam, your fund is a very well-known. It is one of the leading funds globally. We would like to know how you evaluate the current situation, how do you assess it, and what are the directions in investments that you can see now where we shall place our assets and invest, please?
I think, to be very honest, I think the easy part of the year is over. The easy part of the year was the first half, when the global markets were driven by hope of AI. So this, of course, benefited the American markets, but also to a large degree, also the Northeast Asian markets, such as Japan, Korea, and Taiwan. And quite separately, India has been doing very well, not only this year, but for a very long time, because now India is the 5th largest economy in the world, and it probably will be the fastest growing big country in the world. And of course, in terms of population, India has overtaken China. So I would say India is a very special case. But elsewhere, mostly the world for the first half of the year was driven by the hope of AI. And I think longer term, the dream of AI is still very strong. But inevitably, there is a bit of a lull between the expectation and the reality of AI. So we are going through that right now, because some people will say that, well, there are no immediate so-called killer applications for AI. People are trying to roll out AI phones and AI PCs and various applications, but so far, they have not been overwhelming success, such as Microsoft Copilot, for instance, right? So the initial reception is lukewarm. So I think the easy money for the year is made already, and I think the remaining 4 or 5 months, mainly it will be dependent on U.S. macro data and Federal Reserve action, and of course the U.S. elections as well. China is also very important, but the latest macro data coming out of China still shows a slowdown in consumption and even in manufacturing activities as well.
Спасибо.
Thank you very much. So we covered Hong Kong previously, and we started talking if it's interesting or not interesting to buy there something. Do you have your evaluation? What about Hong Kong? Is it cheap to, for example, Hang Seng, that it is here? Or maybe we shall wait a bit, and so some people advise us to wait a bit, to wait until some global events finish, for example, US elections and so on. So shall we do something now or wait a bit?
Well, I think actually in the short term, Hong Kong offers some sort of safe haven from the from the downturn in the tech sector. So when everybody's rushing into AI, nobody was interested in China, and I still would not say China is a very compelling long-term investment case, to be very honest. Because if you look back at the long-term history of the Hong Kong market, it's very sad. Chinese economy has grown by 20 times in 25 years, but be it the Hong Kong Hang Seng Index or the MSCI China Index or Shanghai Composite Index, they have not gone up very much in 25 years. So that's during a period of extremely high GDP growth in China. So obviously the Chinese economic system is very different from the Western capitalistic system. So even though Hong Kong itself is arguably capitalistic, but China most definitely is not. So given the future outlook of the Chinese economy, it will be growing, but at a slower rate, maybe 4 to 5%. And China is getting very good in certain technologies such as EVs and battery, solar, and they're catching up in even in semiconductor. And I think some of the business models for e-commerce, etc., are world leading. But unless something really changes in the economic system, otherwise somehow it doesn't necessarily translate into better shareholders' return. So I'm very honest. So long term, the investment case for China, including Hong Kong, still needs to be proven. But in the short term, I think there is a trading opportunity because the world is now less focused on AI and on Northeast Asia and even on the US. So I think some capital may flow back into Hong Kong and into China. And there are many, very good companies in Hong Kong and in China. I would say, especially in the EV sector. At the beginning of the year, because of over competition and also slowdown in EV transition in especially the US, but maybe even also in Europe. So no EV companies was doing very well. Even Tesla was not doing well. But now things are down a lot, right? Be it even Tesla or even the Chinese EV companies. And now they offer a very compelling value. And then now you start to see that, Europe, I mean, like Volkswagen, for instance, is almost like giving up. For the first time in over 80 years, they will be closing factories in Germany. And that's partly because I think Volkswagen will start to work with Chinese EV companies. And, basically helping them to build factories in Europe and to sell their products in Europe. So I think certain sectors and certain companies in Hong Kong are now compelling opportunities.
Понятно.
Well, it is clear. So you have said EV, but and you have mentioned artificial intelligence. But so could you tell us, based on the current situation, which investments are most attractive, especially if we speak AI? Let's take Baidu. Is Baidu interesting for investors?
Baidu probably has one of the leading large language models for China. Yeah, but I don't think Baidu is world leading because they're cut off from the most advanced chips by NVIDIA. And also, sadly, not so much Baidu, but Alibaba and Tencent 5 years ago, they were as big as Facebook and Google in terms of market capitalization, but now they're barely 1/10 as big. Then that's because of domestic policies in China. China misunderstands technology. They think software is not really technology. They only believe in manufacturing and hardware. So they ended up cracking down too hard on their own technology companies. And there are also ideological reasons for doing that as well. So now they're not as rich as the Western companies. So they do what they can. And also, obviously, there's restriction on data transfer. So Chinese has this internet firewall. So legally, they cannot access data from outside of China. And there should be no exceptions. And also some American websites, government as well as corporate websites, start to restrict access by Chinese companies. So I think although there's a lot of data in China, but in terms of global learning, I think Chinese companies are somewhat hampered by that. And also among the big internet companies in China, Baidu is probably one of the worst. Yeah, compared to Tencent and Alibaba or Meituan and other ones. So it's not just in the last 1-2 years, but Baidu has been falling behind in overall business for many years already.
Thank you very much, Mr. Tan. It was really interesting for us to hear your opinion, and we think that investors will take into account your opinion with regard to Baidu, with regard to AI, with regard to EV sector. So with this, we would like to thank you and to wish all the best to you. Hope to see you again. Thank you. Well, we have our talks with our online guests, and now let us get back to this stage, to our audience, and let us talk to guests. Let us talk to guests who are here next to me. Now, I would like to give the floor to Mr. Eldar Shakenov. He is analyst of Freedom Broker. We have talked a bit about Hong Kong, and let us get back to the most interesting market. Of course, everybody is interested in the US market, what is happening now, especially at the background of yesterday's event. We will touch upon this a bit. Now, the floor is given again to Eldar Shakenov, who will speak a bit about US. Thank you so much, Pavel, for giving the floor to me. I would like to share about the prospects of American markets. I'd like to share some researches. In general, the future time depends on the factors such as economic growth, inflation, politics, elections, and geopolitical situation. We consider that investors shall be ready to both scenarios, to the best one and to the worst one. It is like soft landing when we speak about positive scenario of economic growth, and we have the bad landing, yes, when we speak about the implementation of risks and some drawbacks. We have prepared presentation. Is it possible to show it on the screen? Because I would like to show visually our observation. Could you please show the presentation on the screen? Presentation from Eldar. So forecast trends and investment ideas. At the current market, we still have good opportunities. Can we please go to slide number 1? In general, our market expectations depend on 2 scenarios, and based on these scenarios, we will be able to make decisions. The positive scenario proposes the growth of the market, support of the market, and we have also negative scenario when some factors will impact the temporary volatility and the market decrease. Let me speak about each of the detail. So recently we see that inflation is decreasing. It could change the situation, and there could be some specific risks with regard to it. If we speak about absence of recession, but if we speak about growth, it will help companies to earn money, and the revenue of the company could be high, and investors would be ready to pay high price despite the high growth, and it will justify the expectations on the future growth of the company. So FRS might change their policy, and they may make the shares more attractive because we see growing risk appetite, and maybe investors would look for a higher yield at this stock exchange. In general, we see that the technologies are being developed, artificial intelligence. Artificial intelligence was the driver of the first half a year, and as we expect, the expenditures for AI will be continued to grow, and many AI-related companies show the growth and the increase in their revenues. I will later show some of the companies. 6 trillion funds already. 6 trillion funds could be the big support for the market. And also, company could send their funds to repurchase their stocks, and it will improve the situation. And in case of best scenario, we will see the market growth. However, investors shall be ready also to the negative scenario, because there could be some adjustments to the market. Negative scenario will show the late cycle when FRS will change the situation, and it would be the slowing down of the economy, and this would lead to unfavorable conditions for the growth of the company's revenue. So the revenue will be shrinked, and the shares will be less attractive. And all of this impact the reduction of P/E index.
And on future yields that would be related to the rates and further yields, as well as more sustainable inflation. If we see that inflation shows some temporary increase, which will be capped by FRS, which will keep them at high level during a long period of time, and this will impact on the market. In general, risks of choice, as well as seasonal factors, which we will discuss in the next slide, risks related to geopolitics, which also will add volatility in the market. Show, please, the next slide. I'd like to draw your attention at global indicators from the perspective of valuing the market, which gives us a hint how expensive it is to invest in the American market. And such kind of indicators will help us to look at the stock exchange and markets of US from the perspective of valuation. It is higher than average during the last years, and investors are ready to pay expensive, which certainly gives them expectations for the yields from such companies, and these peak values are much higher, and we may make a conclusion that now the market is at the stage of development, didn't achieve the extreme values, which says about opportunities for growth. And we are not close to the US markets in the peak values. In general, that we now are higher than average values, which says that investors look with optimism at future yields in our markets. Also, I'd like to draw your attention how mature is the trend versus the historical similar values. And as we know, October 2022 showed that market came to its bottom floor values, and from that time, during 21 months, there is some increase of growth by 13% to minimum S&P. And if we compare it with the average growth, which market, how much our market will need in order to restore it, will be 49 months and comes to 115%. And it says that the market has some room for growth versus the previous cycles. And look at the right side of the chart. The blue curve shows the current cycle, and starting from 2022, the current growth, as well as gray lines show each correction by 15% and a long horizon, which is our current market, which is being developed and didn't come to the extreme values yet versus its history. And in general, market even can grow faster and higher, but because of the seasonal weakness that tactically shows the indicators which are important related to the cycle when four-year presidential term comes to its end and there is another election time, and such period shows high volatility before the election. And the market is very careful. Nobody knows who of candidates will win the elections. In this regard, there is some cautiousness, and we may see the weakness in the market because of that season. But as soon as the winner is announced, as a rule, the market becomes more clear. And in this regard, we may see as we see in the right side of the chart, at the end of the year, after presidential election, November, December, many issues stop being unclear, and there is the market rally. And before the elections, there could be some volatility, but as soon as uncertainty goes down, there could be the long-term market development. And then we see slowing down the employment market, and the banks start to increase the rates, and investors like Warren Buffett went out of Apple assets, and we may see also the indicators that manage mood of investors, and it shows that stocks become cheaper and investors are ready to buy them. And algorithms, trading algorithms sharply decrease the prices, which gives an opportunity for buys in. And a big driver that could add or could serve or drive the market up is the cash accumulated in the amount of 6 trillion that could be inflow into the market. Investors will look for higher opportunities, and assets will become more expansive and contribute into the movement up. What is our conclusion? We should be ready for all scenarios. The best solutions for investors will be choice of stocks from different sectors. And first of all, they need to look at quality. When companies show strength of balance, yields, and although some deviations could be temporary, companies that easily deal with their debts could go back to prosperity. And our sample consists of such bonds. And if you have time, then I can describe each of them in each sector. And let us go from general to some individual ones. We just did our sample from perspective of 3 criteria. The third is momentum. When share or stock shows its movement and resists some local factors, and there are stocks of development industries that are aimed at long-term growth, from which we expect some higher yields. And cyclical indicator can show us the growth of economy, and there are expenditures growing up on infrastructure. And quality shows stability. These are such industries as healthcare, utilities. Even in the unstable times, consumer continues to pay his bills related to utilities and keep tracks of his health. And they have strong business models as well as sustainability. And another share is for more aggressive growth, which is artificial intellect, that in general can increase the revenues of the companies as far as new opportunities are open, and colleagues will talk about that in details. And stocks of small capitalization suffered most of all in the last correction of 2022, when inflation grew up and rates grew, and stocks of small capitalizations are historically undervalued, and there is a possibility for some capitalization and decrease of the rates, as well as in general, with growth of appetites. Stocks of small capitalization may show very good growth in the nearest year. In general, each company from these sectors demonstrate good characteristics, have upsides to the values, and show the profitability. Although if there is any volatility, they may come back if sentiments of the market also goes down. And thematical ideas include AI, stocks of small capitalization that can give a good return in general. Thank you very much for your attention. I was happy to share it with you. Thank you. All the presentations will be available, and you may just look at the details later on. But my finalizing question for your topic will be my conclusion that you look positively into the market, but you expect temporarily or horizontally. In any case, it will be a rally. And what will be the characteristics if we look at the historical data of S&P 500? Seasonal weakness cannot be excluded as far as there is a policy, how it may impact on the exchange market. And Trump will go back probably to the trade war, and investors will behave with carefulness. And historically, adjustments, very healthy ones, 5 to 10%, cannot be excluded. And we also may see that we didn't come to some maturity as we observed it in peak values, and we see it in the values, tactical indicators, and the market has a lot of opportunities if we look at the market from the long perspective. And the market during a year also can show such a trend. And we should not exclude also a negative scenario. In the case of tough landing, investors should focus on the qualities of the companies that earn money and easily pay back their debts, and they are ready or should be able to buy at low prices, which gives good investment opportunities. And adjustments could be just a holiday for investors. Yes, this is always a holiday for investors, but for a small part of them. Thank you. Is this so? I have heard today, and I will give the floor to Mr. Sultan Jamagali, from whom we may hear as saying, maybe he took it from somewhere, that everyone waits for soft landing, and today we just heard this always and many times, but it may become a long landing if there is any floor for that, and whether there will be any negative or positive assessments from the mouth of Sultan. But let us talk about AI and about details or depth of AI. What happens there? Please, presentation of Mr. Sultan Jamagali. Show it in the screen. Hello, Pavel. Thank you very much. Thank you to ITS for the opportunity provided to me to talk in the panel session with such wonderful analysts and talk a bit about the semiconductors potential. Let us start from the term, what is semiconductor? If we talk simply, these are chips, and they are everywhere in our gadgets, in the mic, and in all the electronic devices. Distinguished colleagues, I have 10 slides. 3 last ones are our ideas, but the remaining will be preview in order to come to these ideas smoothly. As I already said, semiconductors are used everywhere, and you may see from which segments the companies producing semiconductors can get their revenues. And if we look attentively, they take it from the segment of smartphones, which is 104 billion USD, and by 2025 this figure will grow up. And we need also to note that in this segment the highest growth will be shown by data centers, which is the top component, which is 76, 78, and 136. Because of development of AI, many companies will need huge capacities of data centers, and they become more technological, and use of semiconductors in the machines become more and more relevant. And where we may see slowing down, according to deformation, we see that this is observed in individual or in personal computers, and they become less relevant as far as consoles are produced, like PlayStations, where video maps are more relevant. This is a small illustration how chips or semiconductors come into the hands of CEOs who then show it to the public. And what is the chain for that? There are producers like ASML or Nikon at some degree who provide their equipment for semiconductor producers. And there are developers like NVIDIA or AMD that say what kind of chips should be produced. And who wins at this stage? That captures the market. And the best architectural solutions are in NVIDIA, and that's why their chips are favorable. And this is the supply chain now, and I think that further on this will go on in the same way. Now let us have a look at the capacities or potential of semiconductors. We may see 2 main reasons why semiconductors will grow up. First will be AI, and second will be expenditures of large technological companies. Let us start from AI. We all know that the market volume will grow up on a constant way up to 2030. What will happen further on, I am scared to forecast, but I think the trend will go on. And the market will grow, and chips that are needed for supporting AI will get or give huge yields. And we see that by 2030 the volume of market and chip production will grow up. The next chart, and we are talking about AI, but in our routine life we face the artificial intellect and how it is incorporated into the lives of corporations. It grows up, and we see a huge jump in 2023, 2024 at the background of new versions like GPT chat, and more companies start to use AI in their everyday tasks.
Особенно влияет
AI implementation impacts such companies as NVIDIA because their EPS is growing. We see that there is a tendency to grow, and in general, this graph could explain the picture and the situation where many investors and the market, they say that AI is like the bubble that is similar to the case that we had in 2000s when it was .com crisis. But you know, when we speak about .com crisis, Cisco had the profits indicators that are lower than today's indicator from NVIDIA or Apple. And that is why I think that comparison of .com in 2000 and the current growth of technological sector shares could be right. Next, we are speaking about expenses of big tech, capex of Microsoft, Amazon. You know, each year the capex is increasing, and if we look at the graph on the left, we see that from 2018 to 2021, capex were at the same level, about $60 billion. And mainly this was expenditures for machine learning. But then from 2022, with the development of generative AI, we see that capex is growing with 25% rate. And it also impacts the NVIDIA yield. We see now the graph on the right, and we see that there are similarities. And in general, big tech capex, they support shares of semiconductors companies such as NVIDIA. If we move to the next slide, here we would see the specific growth stages. So stage one, when we speak about implementation of AI, and the main beneficiaries are semiconductors company NVIDIA, AMD. Next stage is the stage that we have just taken a step into. So here the beneficiaries would be data centers, data processing centers, some factories that produce semiconductors and memory chips. Then, with the further development of AI, the yields will be at such companies as OpenAI. Well, we pay for ChatGPT $20 if it's a fee-based subscription. However, right now I know that they do not cover the expenditures. And then Google, Meta, Adobe, they will generate more revenues due to the development of the AI solutions. And then stage four, companies that develop AI and they are fully on AI, and it would be sector of biotechnology or biomedicine where AI is developed. So there are 4 stages or 4 phases, and right now I will remind you, we are on stage number 2. As for invest ideas, this graph shows the largest semiconductor company. As for capitalization, for the 1st of September, NVIDIA had 3 million, but then yesterday it was a decrease by 10%. However, it is still the leading one if we compare with some other companies. Let us speak about some prospective ideas. There are 3 of them. So first, AMD. The main idea is that NVIDIA processors are purchased really fast, and maybe there could be some delays and such big tech companies so that to replenish the shortage of NVIDIA semiconductors will buy it from AMD. AMD has such processors as Mi 300, and they are at the same level as NVIDIA products. And the company has a focus on data center segment. Then ASML, let me remind you, ASML is the only company in the world that now provides the equipment for chip production. And having the securities of this company in the portfolio is a good idea. They increase the number of their factories, and they also have the specific feature. They produce extreme ultraviolet. If you are knowledgeable about chip, this information is very useful. Then ARM, this is a company that recently went public. You see that 139 billion the capitalization, the income is 3.2 billion. The company is just at the first stage of its development, and it has the good architecture. It supplies processors for Apple, for Snapdragon. Their growth will depend on the growing number of their clients. So, dear colleagues, thank you so much for your attention, and this is briefly what I would like to tell you. Thank you very much. I think it was really interesting for all of us. I have a question. Yes, ideas are cool, everything is clear about ideas, but two questions that usually investors ask any brokers and any client managers and so on. Shall we sell NVIDIA and shall we buy Intel? Or maybe not buy? What would happen with Intel? Because yesterday we had the report that Dow Jones Index Committee had the proposal to exclude Intel from Dow Jones Index. What's your opinion on these two securities? Yes, I understand why there are such talks about selling NVIDIA. The report was quite good, but it was not quite good for the market, let's say, mood. Like in any situation, to sell or not to sell NVIDIA, it depends on the price that you bought it. If you bought for 30, then to sell now for 105, it's up to you. If you want, please do. But if you just recently came to NVIDIA, then I think there are some opportunities for further growth, and mainly these opportunities are connected with the fact that AI market and big tech capex will continue to grow, and NVIDIA here has been and will be one of the main beneficiaries. As for Intel, I would agree with you. There are some opinions now to exclude Intel from index, and maybe, I guess, next year Intel will have some restructuring because company focused on one segment that is failure now, and they need to change the focus, and there is some uncertainty and there is some misunderstanding of where to go next, and maybe this will distract potential investors. So maybe some actions would be quite risky now. Will there be continuation of this decrease, or it's... Well, I think that now there are more segments that are more prospective than Intel. Ildar has just told me, for example. You know, General Electric was the latest company that was excluded. However, now General Electric is a super company now. Okay, thank you so much, and I think it was really exciting for us to hear you. Let us continue to talk about American market, and let me give the floor to Ilyas Makazhanov, who is the leading analyst of Centros Securities Asset Management Department. We want to hear your opinion about American market or US market. Thank you, Pavel. Good day. Good day, esteemed guests, colleagues. Today, I would like to discuss the dynamics of the stock exchange over the last 2 years and also the prospect for 2025, as well as influence of technological sector and AI on the future trends. Let us start from 2023. Let us give an overview. We remember that the year was successful. All indexes like Nasdaq, S&P, they had some growth, and there were some key factors that impacted this growth. First of all, the wonderful 7 companies that showed growth, 7 technological companies, they bursted the market, and the yield was 75%. The share from S&P 500 was about 25-30%. NVIDIA was one of the companies that stood out. They were beneficiaries. The processors were sold, and it was difficult to find the available ones. And 2023, it was also AI year. And these investments into AI led to the growth for software, for technologies. Companies started to spend large funds, capex, that are growing each year. And the third thing is a macro indicator. Although there was an inflation in 2022 and 2023, the growing inflation, however, the market was stable and was actually growing. Now let us move to 2024. Here, this year, we see some tendencies and trends. In the beginning of the year, it was kind of uncertainty due to the FRS policy. Nobody understood what is going to be next, because in December 2023, in the protocol, the protocol prescribes that probably the rate would decrease 3 times in 2024. However, as we know, January inflation, also March inflation, April inflation increased. Although in dynamics it was decreasing, but we see that market is responding very fast, and as the market was growing for a long time, there were some prerequisites. And if we speak about technological sector, this year technological sector is growing, but not as much as it was growing last year. Last year, NVIDIA showed the significant results, but it would be difficult to show the same numbers each year. And it would be difficult to surprise investors each year, because investors always want more. And as my colleague Sultan said, he saw some failures. The reporting was good. However, it was not sufficient enough for investors, because they expected more than that. Now, speaking about the rate, the market dynamics showed the decrease. The market was more or less stable and was expected to have the rates decrease, but each time it was delayed. First they said March, then May, then June. Everybody expected that the decrease of the rate would be in September, and everybody thought what was going to be next in November. Will FRS act aggressively, or maybe they will wait until elections, and then after elections they will start this aggressive decrease of the rate? It's difficult to say now, because based on micro data that we have, macro data, we do not expect recession for the moment. Will they do the same when FRS acted in 1998? You know, after the action, S&P increased for more than 30%. We don't know if it would be the same case or not. It is difficult to say it at the moment. I also would like to talk about the future year prospects. If FRS started the rate decreasing cycle starting from December, then next year this rate decrease, and if inflation is manageable and the economy will start to be cool, then market will see the growth. However, at the same time, there are some concerns about the future actions because the market is in a specific position for many years. So it was growing, the rate was growing and growing, it was not decreasing, and any data that the market will not like will impact the situation like we saw it yesterday. Although in the beginning of August we saw the little decrease, however, now we need to expect for macro data, and we need to make conclusions based on this. As for the next year, and as for the shares, and as for the sectors that we need to observe, if the rate decrease starts, investors will look at the risky assets. First of all, we will speak about companies with low capitalization. We know that they were not able to grow because of these rates, and also the grade 7 companies, they were growing. This year, if the rate decrease starts, then such companies will be able to act. The loans will be more or less cheap, and such companies will be able to do more. Also, as for sectors, it's about materials and some other industry, healthcare also. The grade 7 companies were growing, but if we take 493 other companies from S&P 500, you know, they have already caught up, these companies. I also would like to say a couple of words about AI. AI is one of the most transformational phenomena of our era, and it is now all over industries and sectors. This is a revolutionary technology. However, on one hand, there are lots of opportunities. However, there are also some risks. AI helps us in services, in some knowledge access. It helps in some researches. It would allow for more discoveries, probably. In production sphere, AI would help us in sustainability and efficiency. However, these AI possibilities will also be related to ethics. How AI impacts the workforce market? Shall we control AI? Which algorithm will AI use? What about transparency? What about the work of AI? So these are the questions, and I think that in the future we will need some kind of databases for AI so that this technology would work for the sake and for the good, for the benefit of people. Thank you. So you have a positive view to this market, right? And you are waiting for the growth, right? Yes, it's a normal story about brokers. Somebody is looking up, somebody is expecting some decreases. Yes, I would say it's about growth. NVIDIA is a great company and maybe the only company from blue chips that is a volatile one. And at the same time, we see competitors. Microsoft, nowadays, they are also producing chips. Nobody wants to see NVIDIA as a monopolist. Everybody wants to have their piece of cake. There was also Amazon. There were some rumors that Amazon secretly do chips. We don't know if it's true, but maybe in the nearest 2-3 years, NVIDIA will be the beneficiary. However, there are competitors. There are such companies as AMD, Microsoft, probably Amazon. So the competition will be only growing.
And from the perspective of production extension, this may become more accessible for everyone. Thank you. Thank you very much. Then not only AI was the thing the world and the US lived for, let us speak about some closer aspects closer to Kazakhstan. And I give the floor to Azat Otibay, founder and managing partner of OD Consulting, who will talk to us about Islamic investments. I would say so. I should say I don't know this topic very well, and that's why I hope that you will get some valuable information from his presentation. Thank you for presentation. Happy that investors feel all the interest in Islamic finance. Many try to understand what is this, and when something is being developed, a million questions are asked: how it works, whether it will work. And with Islamic finance, also there were a lot of discussions as well as myths and questions, or maybe some doubts. And if we talk generally on Islamic finance, let us look at it from different perspectives. First, if we talk from the point of view of a person who believes in Islam, then he will think it from the ethical perspective and in practical way, that whether this tool will be available for him, whether he could afford such kind of stocks, and etc. And it defines the choice itself. We're not talking about yields or profitability of any certain instruments, but from the perspective of investors, how the finance is set up. There are some principles on which Islamic economy is based on. We look here how the tools behave and how we can, what kind of attitude we need to have. And we may look at them as some certain screening, like green finance or ESG has some criteria. And certainly such tools also could be assessed from the perspective of the following Islamic principles: that the company should not impose any damage on the public, like, for example, any gambling or arms that could be bad for the society. And second, we also screen out the companies if they even earn any money and their profits do not exceed 5% on the activities they announce, but they do some additional profit on a different activity. And third, if the company has some certain investments, if they invest in some deposits or assets that are not allowed, and they should not exceed more than 30% from the value of the company. And if the company has any debts, they should also be at the level of 30% of its loans in the equity of the company. And such kind of things show that companies that operate, and we do any screening, like, for example, whether this is halal production, we look at it from the perspective of a view that how these stocks or bonds will behave and whether we need to invest in them or not. From the perspective of tools sustainability, they show themselves in a good way. If we compare halal indices with some conventional indices during the crisis, they show very good outcomes. And this was comparison was done by analysts, and criteria show the company not to fall down too strongly, which is important for any investor. And if we go even further on, like retail investors could perceive this as a good start, where to invest in and where not, from the perspective of volatility. As far as norms of Islam forbid to sell or trade anything you don't own. And from that, all production tools are helpful, like we filter out and take away all the negative characteristics. We think for retail investors, if they are not trained, they don't know anything about riskiness, then this could be a filter for them. From the other side, there is also a good opportunity now, or I will rephrase it. Why before this was not developed well enough in Kazakhstan? Why we didn't invest in Islamic finance? In general, the market of securities was not well developed, there was no liquidity, and international brokers invested more than the local ones, and ITS allowed to invest minimal checks and buy these integral bonds versus the attempts to issue some notes of foreign bonds in KASE and make them affordable according to the norms of Islam. This opens for retail investors huge opportunities to invest and, in general, to understand the trend where we are moving now. One more big advantage available in the market will be development of fintech, because before, to invest big amounts and occurrence of new technologies as well as good infrastructure allow now to start investments with a small check. But this is just a short background information. How do you see perspectives in Kazakhstan related to the dynamics? What can we expect? Me, as well as managing companies who in this market should pay attention to Islamic finance. There was the AFC research and research of Islamic Bank of Development. They forecast that demand for Islamic deposit will be at the level of 2.8 trillion tenge. What does this mean? The concept of Islamic finance relates to risk sharing, and I cannot just deposit my money and have some interest remuneration, and to invest together with anyone for some trustful management would increase and reorient Islamic finance in ETF or other funds and other solutions, which certainly creates good opportunities. Thank you. Thank you very much. Okay, then our session is approximately coming to its end, but I'd like a couple of minutes of your attention for you. And I want another presentation on the screen. I think that you paid attention that the name of our conference is ITS Ideas, which is not just the name for the conference, but also a product for the trading platform of ITS, which we will actively promote. First of all, for brokers, for non-professional participants of security markets, but also the ordinary users also will get some benefits from that. What is uniting all the brokers' applications in the world? And this is certainly a button to buy. And the most important thing when you are playing as a broker will be to make the client buy more often and more and pay some relative fees, which are small but still are revenues of the brokers. Nobody conceals this information. And probably there should be some recommendations to be given to make the clients be active, to trade actively, which will include some investment consultants, which could be author researchers or generation some investment ideas. And all this is demanded. And relatively, the question arises, where to take the data, what data is seen by a client, how a client can analyze them, and we need to understand that the client cannot analyze such kind of data in its majority, and they just want information, what to buy, what to sell, at what price. And then it should be some general recommendations, probably. And ITS Ideas provides, first of all, any data. This is a platform for brokers that could set up this application and provide to his or her clients the information for analysis of the current situation in order to take some well-weighted investment decisions based not only on recommendations of some individual analyst that works with the broker, which is good, and good analysts are certainly very well valued, but also to be based on a maximum possible recommendations. So this could be some forecast consensus. And this what ITS Ideas does, gives the opportunity, as you see in figures, what can be processed on a daily mode, and more than 1 million of data goes through the system, and correspondingly, recommendations are given on a daily basis in the amount of 40,000. This is an attempt to analyze the whole market. And we also keep track to offer you fresh recommendations, not like you open analytical resources, but you see recommendations over a year ago. Everything was changed, and NVIDIA lost 300 billion of capitalization yesterday, but you see a picture of a year ago, and certainly they are not relevant. That's why relevance is important for such kind of data. And correspondingly, the client obtains the most demanded tools. And if we look at the statistics from a big number of analysts, this is a group of data from a lot of analysts. We see consensus of forecast, and you may filter it according to different parameters, individual analysts, all of them together, and based on that to take well-weighted investment decisions. Brokers, whether it will help to him or not, it should help. And this is what the clients require. They'd like to see maximum possible range of opinions and some forecast consensus, some relative prices and recommendations, what to buy, what to sell, strong buy, and etc. We all know that. What does this give you? To keep the clients, to increase clients' loyalty, and correspondingly loyalty of the client to the broker, your client. And we do not hide that this also works for ITS as well as for brokers' businesses. And in order not to keep you too much within the framework of the program that we launched, what is offered now? There are testings in different modes. You may just use all the buttons, filter, and give the clients whatever you like. And on completion of these 6 months, 40% discount is offered to individual tools that you need. And further on, there is some gentleman's set of information about the companies, everything provided free of charge. These are main parameters related to this or that issue. And this is what we can offer in the framework of ITS Ideas service. And as a leader, as a director of the analytical department of ITS, I may also say that we, having huge experience in the nearest weeks, will start in active way, support the clients, support your clients in the way of frequent information provided to you on tools that are traded on ITS platform, plus regular video webinars, workshops, including those with your participation if it is required. Then we are ready to arrange such a support to your clients. By that, we finalize the work of our session. Thank you very much to our participants. Unfortunately, we are short of time, but you heard a lot of interesting things and take information related to what to buy, what to sell, or whether you still need to do this. All good luck to you. Thank you very much.
Good day, dear friends. So here we see the people who have very strong endurance, let's say. Yeah? We have a very interesting topic, the most interesting topic because it relates to everyone. So the topic is how to be a long-term private investor in financial markets. Like Warren Buffett, not like Warren Buffett. So let me tell you 4 numbers. If we go back to 5 years ago, we would see that in the Central Depository of Kazakhstan, we have about 120,000 accounts of individuals. Now, this number is 3 million. A year ago, let us look at AIX. So now we have 1.8 million accounts, and this 1 million was accumulated over this last year. So the key word that we use looking at these statistics is a financial literacy. The speakers of our session, they know a lot about financial literacy. They are promoting financial literacy, let's say. And some people who are here in the audience, some of them are probably brokers. And we want not only to give tips today to investors, but also to some people who are beginning their pathway here. Let me start with a question. What level of investors do you face too when you work online or offline? So we have ladies first, so let us start from Asil, please. Good day, everyone. Thank you so much for these people who are here in our hall, and I would like to say hello to our online participants. I know that more than 1,000 people are registered for this event. Speaking about portrait of investors that I contact with, so usually these are people who have lots of unnecessary information. People think that investments is when you had some trainings and in a year you have, let's say, pink color Porsche. And I usually break the dreams of these people who think about super yields in short time. Unfortunately, lately there are lots of advertisements on internet showing the life of crypto millionaires or people who earn through investment. So there are lots of people who are promoting a luxurious life, and people looking there think that this is all about investments. So people think, yes, now I'm going to sell my apartment, I will put all of this, invest all of this to crypto, and then in a year I will live in Miami. This is the average portrait of investors that I talk to, but when I come to them, I break all their, let's say, dreams. So if you don't know this lady, this is Aselia Ulbekova. She is the founder of Astana Finance School. She's an investor. And now I would like to give floor to Andrei Chebotarev. He is a founder of Finances KZ. And Andrei is also covering financial literacy topic. So Andrei, I know that you travel a lot in regions, and who are your people there? Well, right now I don't go quite often to regions. Now we have online course in Almaty, in Astana, and I would like to thank everybody for coming here, and I want to tell that our course is free of charge. I've also visited Shymkent and Karaganda, and there we have investors club. So there we have people who are already investing. We are discussing macroeconomic. So like here, we just discuss our ideas. So and these are people who have already knowledge and who have portfolios, different portfolios, big or small, but these are people who already know about investment. So that's why I can't say that in regions we have some new people. Actually, I work with people who have already deep knowledge on this. But as for our course, we have the basic course on investments, and sometimes we have people who come with some requests. For example, I have lots of loans, I want to finish with them, and I want to invest. So people think that many people think that passive income is something that would be fast. However, so that to live with this passive income, your portfolio shall be really big, like $600,000, $700,000 per year, so that to live with the 4% of it. But it requires time, 10, 15 years. So passive income is not something that is done fast. However, people usually think that I will do something really fast now, and I will live sitting on a couch doing nothing. Next speaker is Alibek Zhalgaspayev. He's a financial advisor, and you could see him on YouTube. So who are these people on YouTube? You know, I decided to do it differently. So, you know, Asel breaks the dreams of people. Andrei says that this is impossible. This is a course for you free of charge. And I just say, people, if you want it, please come on. Let's start. And as soon as they come, we do financial literacy for them. So if we speak about investments and passive income, people want to have it, want to listen, want to do it. And I tell people that this is possible. I will teach you how to do it. And then we start this financial literacy. We have a big blog or section about financial literacy. I'm a former teacher, and I know that when you give example or when you give a dream, then it works. So you give a dream and then you tell, if you want to reach this dream, this is the way you should do it. There are 3 stages of financial maturity. First, a person learned how to earn, then learned how to save, and then learned how to make more out of it. When people start working, they learn to earn. They think the more they earn, the easier their life is. Well, it could work to some extent. However, when a person increases the life level or life quality, they understand that they also have double expenses. So that's why we need to learn how to save. This is about financial literacy. And then if you learn how to make more out of your savings, this is already the next stage. But what kind of people come to you? Which stage they are at? At the stage of earning. You know, average portrait of my people, people who are 30 years old and more, so who have worked, who have changed some of their workplaces, and who understood that actually they do not have any changes in their life. So these are people who want to find the way out of their situation. So these are actually people who are closer to their middle-age crisis, right? Yes, yes, they are. They feel upset. However, they would see the way out. Okay. Our next speaker is Dmitry Kazantsev. He is a tax expert, and he is the author of the book. So do people read books nowadays? Yes, they do. I have a question to Dmitry. Dmitry, who are your clients? Who are people who come to you? Those who have already earned and they have to pay taxes? Yes, now, yes, I am a tax expert for more than 20 years. And there are different people. However, if we speak about investors, I am the case of how not to invest. Probably that's why you asked me to come and to speak here. No, financial literacy problems exist and people have low level of it, and investors who come to invest, unfortunately retail investors in most of the cases, these are people who are illiterate with regard to finances, because many of them, these are people who live with loans, who want to invest their let's say, last money, so that to have a hope that everything will be fine. There is lots of information on how to earn fast on internet. And unfortunately, a couple of years ago, I myself made a huge mistake, and I understand how people do it. They think that you can just easily press the button and you will be rich. Unfortunately, I was myself in this situation. I let down thousands of people. And if we talk to people, don't come here with loans, but out of this 1.5 thousand people who were in the same situation as myself, 1,100 people were people with financial difficulties. Although we are telling people the right way to behave and the right way to invest, however, people do it differently. So those who speak about investments, they need to understand they could be different people, and people might hear different things. I know Andrei because when we were doing some things, Andrei told us that, Dmitry, if it's about financial literacy, do it this way. I'm sorry to interrupt you, but let me shake your hand and express my respect for recognizing your mistakes. Well, initially you should fight each other, and then you should, recognize mistakes and shake hands. Well, investors have to increase their financial literacy level because, unfortunately, there's about stock exchange, and people make mistakes nowadays. And all of this was for the brokers. You need to understand for whom you are writing all this information, and you're preparing all this information. Now let us move to the part that would be interesting for broader audience. Where shall we invest our money into? How would you describe it? And what is the amount that is quite logical amount so that to come to investments? Asel, you please. As Alibek has just said, people need to learn how to save, and this is the basis of literacy, financial literacy. You shall not have 0 tenge a month. And it doesn't matter if you earn 5 million or 10 million, but if you have 0 in the end of the month, this is wrong way. You need to save at least 5% from your earnings. And if you put it on deposit, it's easy to make transfers from deposit to your personal card, but you need to invest. It doesn't matter what income you have, but learn to save 5% or put your 5% from your earnings to investments. And then you need to study deeper. Start from indexes, start buying ETFs for small amounts, get interested in this topic. It's like a woman and maternity. Unless you give a birth, you do not understand what is it. But when you face it, you start to study the topic, you start to subscribe the people, you start reading different forums. If it's about maternity, you start reading forums of moms on something about children. The same is here. Do first step. Open broker's account, buy your first security, and then you will continue. Alibek, do you have the same opinion, or is it different? I have a different opinion. Now, coming back to what is right. It could be right, but it will not work in case of our people. What we do? First, we ask, what do you want? Where do you see yourself in 5, 10 years, in a year? Which position do you want to reach? Maybe you just want to get rid of your loans. Maybe you want to have passive income. Maybe you're worried about the future of your children. Maybe you want to protect yourself from crisis. Maybe you want to distribute your money. Maybe you learned how to earn, but now you want to save it. And then we just say, if you do this is the way you come. And then the person says, hey, now I understand why we need to save this 10% of the earning. If we tell them, just save your 10% of your earnings, the person would say, and what? Why? But when you start from the meaning of this 10%, All these tips and advice will be meaningful and you will achieve the result. Andrei, what's your opinion? Shall the beginning investor have some specific strategies, also to buy ETF or to buy NVIDIA shares? Without strategy, it will be just opening deposit that you will take money from. I mean, if you use a correct broker, you can do it right way. So I would agree with Alibek. I teach it this way. So first of all, I speak about, let's say, safety rules, how not to meet scammers, why we need to have these financial cultures, and we speak about budgets and about aims, about dreams, the dreams that could come, your aims. Because investing without any goals, there could be situations that a new iPhone would come, new car, or maybe the vacation, and you would spend this money on this without investing. So actually, we do it the way our government do it. Our country, as the president said, lives not according to the budget. As a country, we live using loans, and many of our citizens live the same way as the government. The government has national fund, but people would take this money and would transfer it to their cards. Yes, they transfer it to the cards of our teachers, of our doctors. The problem of our national fund is that they do not have the goal. What is the goal of national funds? They do not have. The same is with our people. People who come to investments, they do not have goals, aims, and they will waste it or spend it because they do not have understanding why they want this money. And then in a year, 2 or 3, depending on the rate, they will have quite a significant amount, and they will have it in their mind. They will think, oh, probably I would buy Camry 80, or I will buy a car from China, or an apartment. If there is no goal, do not come to investments. No need to say now, go buy NVIDIA, buy Tesla shares. It will not work. Well, actually, I bought NVIDIA share. Well, if you have a goal, that's fine. Budget, goal, risk profile, portfolio. From the very beginning of our session, I have a gut feeling that we need to have the other person here. And I will tell you, we do not have here psychotherapists. You know, we speak about the goal that each person shall have. The person shall formulate this goal. As Alibek has just said, people with this middle-age crisis feel it difficult to make this goal and to formulate this goal. Then we speak about strategy, and strategy is based on data. Or maybe the strategy could be future education for children, or the strategy could be early retirement, or the strategy could be buying a new apartment. So a person comes to the stock exchange. What strategy shall he or she have? Let's start from Asel. Could you please repeat your question? I think I was distracted. So which indicator we shall take into account so that to build a strategy? Well, first of all, you need to understand what would be the period of your investment. Some people have short-term goals, somebody have it for 20, 30 years. So the strategy will depend on it. Then we need to understand risk profile. If a person works all these years and then the person receives her salaries, let's say, on the 5th day of the month, then again, it is difficult if the market would have some changes. When we formulate the goal, we need to identify the asset classes. We need to understand what classes of assets we will have, and then we will look at countries. Will it be definite company, and we shall look at this company as a business, not like the graph. The mistake of newcomers is that they are looking at the graph and they see that the company is growing, but when we ask a question, how the company will make earnings over the next years, the person do not have answer. If you do not understand how this company works, it's better not to invest there.
People think in the following way. I have fundamental analysis as well as technical analysis. I teach all these disciplines, and at the end I say that you should not puzzle yourself with all this. You will forget 90% of what I said to you and will not be able to differentiate between all these different ones. You need just to schedule the strategy, what will be huge indicators for you to choose the companies. For somebody, Tesla will be a good company. For another investor, it will be a horrible one. And for some investors, the strategy will be a long-term one. For others, shorter. Yeah, we need to look at the age of the investors. As close we are to the retirement, as more we have chances for risks. Like, for example, 20-year investor could not wait until he becomes a billionaire. For 35 years old investor, he should look, first of all, at his or her age, which is related to the risks. And classes of assets are different. What affords 20-year-old investor will never be afforded by an older investor. And granny at the age of elderly age may not have stocks of Enron, and they sometimes forget about stocks they bought. Look at your age. Risk should be assessed in relation to the goals. As closer you are to the retirement, more important for you will be not to lose rather than to multiply your yields. I just look from a different perspective, from perspective of children. In the Kazakh mentality, this prevails that we care about somebody else much more than about yourself. We just take care of our kids, about your parents, about your husband or wife. Go just buy the store and think what to buy for yourself or for your kids, and to choose kids. And you know that fast food is harmful, Coke is harmful, and then you think, this is just for me. Nobody else will suffer, only me. But if you think about your kids, you will be much more careful than about yourself. And I always say, if you have kids, then there is some period, like until completion of the high school or until the wedding party of your kid. What by that period you need to have? Like, for example, for a kid, you do it in more responsible way, but for yourself, you may just play around to take imagine and then sell everything, to buy and sell short and listen to any investors and etc. For your kids, you will buy something more sustainable, more reliable. But we do, first of all, everything for a person whom we treat well. And for your kids, you compose your portfolio from gold, from hot stocks of Caspio or NVIDIA to play a bit. But this is not just an investment advice. Yes, this is just a thought. Dmitry, what do you think about that? My opinion is, first of all, if you are a beginner in investments, you need to trust more and manage those where brokers invest with a small margin, thought carefully by broker, but not by you. Because without deep knowledge, you might be in the game investing money, but become more and more engaged in it, like let me just collateralize my apartment and etc. And we need not be a subscriber for any recommendations, as far as sometimes they advise what should not be done, and a beginner should not trade by himself or herself before taking an examination or any basic course of financial literacy. This is my point of view. It's good that we just touched this issue. In the lives of investors, there are peaks and falls. Do you have any recommendations how not to feel too depressed, too pessimistic? And this is a therapeutic issue, and that's why let us ask Alibek first. My wife is a doctor, that's why I was impacted by her knowledge as well. When a person gets some pessimistic or bad information, and when you just recommend not do this at all, then your friend or your client may think, why you don't recommend this to me? You don't want me to make money. But when you lose some money, you start to understand how you need to behave. If you lost some money, first of all, and only then he feels pain and starts to understand what happens, then only he can make adequate decisions. It was with me. When I, in high schools, I was in the time of making bets for sports competitions, and I 3 times lost my money. And now, when years passed, I understood. It was painful, but I understood very well that this is not my way. But those guys who just won, who got some money from that, they just were stuck in that time. And that's it. If you faced the crisis, you are cool, you just lived a life at the age of 35, and you know very well how painful it could be and what could be the consequences of your actions or inaction, then it's much better to work with these people. They know the price of their mistakes. Andrew, what should be done? What we need to do when everything is good or everything is bad? Investors who didn't go through the first session devoted to recession, and 28% of growth, milky investors wait for the first crisis, how they can tackle with that. They should drink green tea, should understand that every fall will be at a high, because it's interesting that something happens, but we recall the mistakes of survivors. We just keep stuck to the sins, death sins, to play, for example, a role of traders. You, as a driver, just got a license, sat into a car and used the highway and behave as if a professional racer. And what differs you will be experience, and a beginning an investor cannot become a professional trader, like a driver who just got the driving license cannot become a professional racer. And a lot of people like themselves in the role of investors, and they just make the second mistake. If, for example, you do not buy some stocks, your relatives start to send you different news, like, oh, I heard that you just bought stocks of NVIDIA. I heard that they are now in the process of investigation. And you need to live with that. Our mentality is that every person should be responsible for his or her life himself or herself. That's why believe in yourself. If you change your strategy on a constant way, it means that you do not believe in yourself. I am happy that we have IPO of Air Astana, that this is wonderful for Kazakhstani residents. They don't understand now that very good was IPO failure for Air Astana, because I heard a lot, like, for example, I sold an apartment, sold my vehicle, and am going to buy shares or stocks of Air Astana because I heard that this is 32% of gain. And Kazakhstani residents face that not always this is wonderful, that you cannot invest on IPO all your money. You should not borrow for such kind of investments. Those who just got that pain, they learn lessons, and that's why thanks a lot to the top management of Air Astana for such a failure. And you just should not read, should not discuss it with your colleagues like Bloomberg, Morning Star, and etc. Give you some information, but you should not do this. Why? Because you just feel this emotional disruption. As far as like you buy an apartment and you are not going to sell it cheap because in Almaty the earthquake happened, but because of that nobody just rushes to sell the apartments there. And not always this could be money that you will need in the nearest future. You just should understand that investments is a long, boring, routine story. This is like clean your teeth. Yeah, not very interesting, not very nice, not very needed. And that's why first what people do when they become investors, so they started to consume the information. And as soon as you just chose the strategy, follow it and don't listen to anyone. Yeah, the markets grow up, but Evgeny, not always we lose the money. We gain sometimes, and there is the story related to taxes. Do you have any 5 rules for the beginners who should understand how to behave in these conditions? Yeah, you should not forget that the next committee exists and tax staff knows everything about you. And we do not pay taxes so far for our investment gains. We signed the code, but most of the investors do not submit declarations at all, and a lot of notifications are sent on annual basis to investors, and they know those who invest in crypto markets thinking that nobody knows anything about that. But a month ago in Astana, those who have cryptocurrency then You may not say to the tax committee that you didn't know about paying the taxes. You need to show it as declaration of your revenues in the form of 250, whatever you have. And there are those who think that they are the smartest ones and show a couple of extra bitcoins to create themselves the pillow of security. But the tax committee will see the real picture, and that's why those who live according to the principle now nobody touches me and it's cool, but the tax committee starts to touch you when 2.5 years passes, and then you just will be caught by them. They do not hurry up to request anything from you. Just pay taxes, and that's it. Wonderful. Good when people pay taxes. And finalizing the main part, we will ask questions, but I'd like to ask you what should be the day of an investor beginner, how he should start the day, not smoke, be healthy, and etc. Describe the day of an investor who started his investment careers. When I get money, I just distribute them according to the category. This will be sent to the broker's account of my daughter. This will be for my entertainments and presents. This is for myself. And such kind of distribution shows you not to worry if anything happens. And in an urgent way, you need to go to the hospital to install some implants and etc. And you get the bill for 700,000. What can you do? Take the investments from your accounts, but in the stock exchange, everything falls down. What should I do? I have stocks. I have rebalancing. And when you get some bad news or bad events, and they always happen, and you bought the extinguisher much before the fire gets started, you do not feel worried. You will not look for any extinguisher with the fire. And this is the rule. Distribute your revenues. This is for my living. This is for my retirement. This is for security. This is long-term deposits, and etc. And how much time passes? So this is 2 hours per month. Most of all, when I sit on my toilet bowl, you still are with a telephone there, and you may do this work there. Or when I am riding a taxi. This is just no 3 screens in front of you, no cool office or farms or mining equipment, and etc. This is just an ordinary smartphone, sold, bought, distributed money in deposits and stock exchanges, and sleep quietly before next money is deposited in your account. My answer will be short and simple. Without entering any terminals, in my time when I opened the stock exchanges, when I studied in the university, we rented an apartment and went abroad. Foreigners were welcomed by us, and for me, it did not mean that they are good investors. They are not scared. They know that apart to deposits, there are also stocks. And we had another guest coming from abroad, and his dad, for his 18th birthday, presented him a portfolio. And once a week, he just entered the application and looked what he would buy, what he would sell, and he was not a professional investor. What he has and what is missing in our people because of the Soviet past, we had these green pieces of paper. We played with them, but they were bonds of the Soviet Union that was not paid back, and we were vaccinated against such kind of frauds and etc. We are scared now. For us, deposit, but the better would be just concrete, which will be the best investments. But our kids will probably not be scared of that, and no fact that they will not play in such a game, but they will not be scared of the stock exchange tools. And
I always say that the investor could do the daily activities, could be a wonderful doctor, excellent teacher, accountant, HR specialist. You shall do what you like and you shall do what you earn money with. No need to be the professional trader, to monitor all the news. Just do what you like, earn money and enhance your expertise there. Do different courses, read information, become better doctor, engineer, teacher, technologist. Try to increase that part where you earn through your competence systematically, regardless of what happening in your life, relatives, births, deaths, weddings, birthdays. Despite all these facts, a part of your earning shall be through your daily activity, and then part of this sent to investments. Because if we speak about the long-term investment, the winner will be not the smartest investor, but the winner will be the investor who is disciplined, who is committed to discipline. Well, that's great. Are there any questions from our audience? We have a microphone. Please. The microphone will be given to you because we have online participants. They also need to hear the question. Please. Well, I have a question to all of our speakers. As a rule, according to statistics, less than 10% of investors that do long-term investments could do more than S&P 500. Is it meaning in this diversifying or to do something? Or maybe it's better just to take the company from S&P 500. You know, I have been investing for 12 years, and as an investor in the very beginning, I thought that I will do more than the company. So I chose the shares, and I don't know why I was confident that I will choose the next unicorn. However, now, after several crisis situations, when I failed several times, I form my portfolios this way. 60% they are from funds, not necessarily from S&P 500. Well, I have time and my age allows me to believe. As Andrei has said, your portfolio is formed also based on your age and based on the specific period. In my portfolio, I also have alternatives with a Bitcoin, for example. If no, then no, it's not a bad situation for my portfolio. But I have a basis, for example, ETF, and I have alternatives. And I also have the shares of some separate companies in which I believe as a long-term investor. And despite the fact that shares is going down or not going down, I buy because I believe. And so such approach, when you buy what you believe in, yes, in my case, for example, I receive yields not every year. Not like S&P 500, because we understand S&P 500 provide good yield this year only, but not always it was like this. But still, I had some good cases. In my understanding, just to buy S&P 500 is is not the option, right? Because we want to have some emotions and we want to add more colors to our portfolio. And it also means that we might lose some opportunities if we don't invest in some other shares. Yes, otherwise you could just invest to S&P 500 or to state bonds and you would receive 4 or 5%. You could form this portfolio if you have this conservative risk profile, if you are a conservative investor and you feel upset when the company in your portfolio go down. I think it depends on the person, on personality. This is important. Can I also add here? Marcel says it's right. We are all people. And a person is usually an emotional creature, and the way it is right to do doesn't work. You know that it is some case when somebody would be more than S&P 500. However, when you at the market, you think I am better. I heard something, I read something, and you cannot just refuse this opportunity. People like to go to extremes. People like to go from one extreme to the other extreme. They don't want to be in the middle. People, for example, say, I will not go to funds, I will invest in something, but actually the best result is somewhere in the middle. Yes, most part of your portfolio shall be in indexes because, well, it's the same as S&P 500. But anyway, you would like to have something else. And you need to put a specific rule. 60, 70, 80% should be indexes, and then with the remaining 10%, play as you wish. Well, but not play like, just for fun. You have to do it consciously. And then if you see in some time that your this part would be more than S&P 500, then please do it. So not only S&P 500, but part of it, biggest part, S&P 500, and the rest of it is at your own choice. Any other questions? No questions? Wow, that's a pity. When else you would tell something to Mr. Chebotarev? Okay, let me do it. There are sometimes some contradictions, right? There are always two extremities. There is a Montecchi family, Capoletis family, or people who use iPhone, people who use other phones. Let us talk about the conflicts in investments. What are two parties that are having contradictions? We are speaking, there is a technical analysis for short term and there is a fundamental analysis for some other, let's say, long terms. But there are some people who do not understand what shall be done. And then, if people do not understand, then you can do investment to indexes. You don't have to do any analysis. What you need to do is just to click. So professionals could argue around different things, but it's about professionals. For many big newcoming investors, if you are the new person here, and if people tell you do analysis, do this, do that, this is not what you need to know at the early stage. Any other opinions? I would agree with regard to technical analysis. If you don't do it for 24 hours per day, you don't need it actually. However, fundamental analysis, I use it. I use it this way. For example, let's say I want to buy some hype share, I have emotions, and I want to check. I don't know if I'm allowed to use bad words here. I want to check. Are they good ones or not so good? So, if the company has no earnings, has lots of competitors, has lots of debts, and it costs like 10 apples, then probably better not to buy shares of this company. I mean, this is just the assessment. You know, we have lots of news about IPO, AI bursts, and then you start thinking this, I will buy this and that. But you know, when AI hype started, and you know, there are such companies that has AI in their names, and you just feel that if there is a name with AI, you see the growth in 30 or 40% because people use their emotions to buy the shares. I use fundamental analysis to define if it is worth to look into this company, or maybe it's just the sham company. And it's quite easy, just 15 minutes. You just check if they have net income, if the income is growing, what is the level of their debts, and it's quite easy. And the broker's applications that you use, do they have any specific features? For example, stop loss or something like this? In Jusan, I like their radar. You know, they have social training. Is when you can show the composition of your portfolio. You know, I have a public portfolio in Instagram, and each month I show what I do with it. So it takes about 2 hours, and sometimes people tell me, no, you made it, you used Photoshop. But now in Jusan, you can show it, you know, you can show it live. And this is the features that I liked. Stop loss and the profit, the trading tools on these are for investors who have investment period for 6-9 months. But not everywhere you can see it. For example, in some there are not stop loss, not defeat. But you can use freedom and some other things. So I mean, you can use it so that to buy what you want. So you know, the more different ticks or buttons you see, the more chances to make mistakes. Well, it is clear that not all brokers do it independently, right? Sometimes they do something from third sources, but it's good that there are lots of integrations. However, this shall not impact the decision of investor. So you have to think, you have to make your decision despite all these recommendations. You have to follow your strategy and not to step down from it. I would like to add here, every time when there are financial experts and they gather together, people want to take from them any specific secret for investments. But I would say that investments are like, you know, brushing your teeth. For example, can you imagine there is a big conference on how to brush teeth? It would be really boring, right? But you know, but when we speak about sales manager would do it. We have this specific vibro toothbrush. It has specific brushes that would reach the unreachable part. But it is quite simple. Yeah, brushing your teeth, you just take toothbrush, you put toothpaste, and the composition of toothbrush would be the same. It's just that some ingredients would be changed, like the colors or the smell or aroma. And what you do it for 2 minutes, you just brush your teeth, then you rinse your teeth with the water and you spit the water out. Nothing interesting. But if you don't do it, you will have bad teeth, you will have problems with your teeth. So the same with investments. If you do not monitor your budget, if you do not do investments, you will have no safe pillow, you will live from salary to salary, and then the crisis would be a dangerous situation for you. It's quite simple. Speaking about applications and the features of different applications, actually I would choose applications without many features. Otherwise, it would be difficult for people to buy, to sell. I mean, again, you will not make unnecessary mistakes. Right now, I am just promoting this strategy. I have it over there. Let my funds be there. I'm not the fan of lots of features. I would like to pay your attention to the broker, the broker who works with your account. You need to understand here that the broker will never tell you this. The broker has the commission from your transaction. So the brokers always had the conflict of interest, and so sometimes they might lead you to the bad transaction. And if you, for example, bought securities for 15 years and you do not do with it, the brokers will even charge you the fee because you are non-active. You bought the securities and you forgot. So that's why if your consultant gives you the specific advice, you have to be confident about them because they have the conflict of interest. The more transactions you do, the higher the income of this broker. So one more incentive for you to follow your strategy because, well, maybe you will have a good investment advisor, or maybe you will have that person who will tell you, let's do this, let's buy this, let's sell this, and they would send you messages and you would get engaged into it. But don't forget, the broker's salary depends on your activities. If you have an account, look at the broker's account and you can see the fees there. So when you open the account, you would see the super VIP tariff and you pay sometimes extra fees. So you can decrease this tariff till the minimum tariff and you will save more money for yourself. It's like the advice on how to brush your teeth. So all our speakers agreed on the fact that the private investor shall invest in a long term. Now, could you tell me, long term, what is long term? Is it like in accounting documents, the period which is more than a year? Or maybe long term is some other period? I would just express my opinion. For myself, I chose 10 years. 10 years, minimum. So I did it and I don't take it. But again, it's not recommendation, just my experience. I invest short-term and long-term. However, long-term is the biggest part in my portfolio. Because why I need money now? I work now, I am active, I am healthy. My children, they are growing. So I want, in the period when I don't want to work, to have a specific capital. Or maybe I want to see my capital when my child is grown up. But short term, well, if I see potentially good transactions, I would invest. Especially I like crises because when it's a crisis, good companies, bad companies, they have the decrease, and then you just buy good companies' shares for the good price, and this is a short-term deal. That's it. By the way, it is also called sale. Yes, it's like sale. By the way, all rich people, they are even more richer in a crisis situation. Probably this is a different. Long term, from 3 to 5 years. Asili, what about you? Also 3-5? It depends on the age. If I am 80 years old, then a year would be a long term for me. But I consider that the golden years are the years when a person is inactive, is healthy, doesn't have any issues with health, with pressure. So maybe from 25 till now 55, I would say. Okay, let's say 45 till 45. And depending on your age, yes. So up to 45, it would be long term. After 45, you do not want to work and you do not have enough health so that to go on business trips and to do your business, so that not to sleep for days and nights. At that time, you want your capital would give you its yield when you do not have such energy. Well, yes, these are long-term periods, and we would like to wish everybody good mind, good health, and good business. Well, I think that everybody is happy with this information. I think that our brokers and private investors will have their insights. Our session was really interesting, even without the psychotherapist. Thank you so much, and see you.
Invia Investments – единственная брокерская компания в Армении с собственной технологической платформой и сервисами. Invia предлагает прямой доступ к американским и гонконгской биржам, продвинутый торговый терминал Astras, торговые стратегии от экспертов, Open API для продвинутых трейдеров и финтех-сервисов. Преимущество терминала Astras. Доступен в браузерной и в мобильной версии. Технический анализ TradingView, скальперский стакан, арбитражная раздвижка, связанные и стоп-заявки, синтетические инструменты. Мобильное приложение с торговыми стратегиями. Автоследование. Следуйте за стратегиями экспертов. Персональные торговые идеи. В зависимости от вашего инвестиционного профиля, ожидаемой доходности и склонности к риску. Invia Investments – надежный проводник в мир инвестиций.
Социальная инвестиционная платформа PyDAX объединяет инвесторов для обмена мнениями и повышения уровня знаний. Подписывайтесь на других участников, следите за портфелями опытных инвесторов, обменивайтесь идеями и обсуждайте стратегии в режиме реального времени. Анализ и обучение. Освойте основы инвестирования через встроенную академию. Быстрый старт. Открытие счета занимает пару минут. Минимальный порог входа и комиссии от 0%. Торгуйте американскими ценными бумагами прямо из приложения. Быстрая и простая покупка ценных бумаг за пару кликов, используя лимитные и рыночные ордера. Оценка компаний благодаря кратким описаниям и финансовым показателям. PyDAX – простое и доступное инвестирование для всех.
Okay, so colleagues, our session is devoted to creation of the product by financial intermediaries, and ITS is the platform that was established for the mediators and intermediate partners to develop their businesses, and we think that ITS implementation will be implementation of the mission of the International Financial Center, for which it was created, and benefits for regulation and ideology that were used for creation of AIFC. This allows us to work, to develop, and to offer the participants huge range of products that are in the international markets. And not long ago, we obtained acts of agreement of the first ITS, and in the nearest future we will implement it, ETF for our own index that we consider as ITF world, and in the nearest future we will be approved by another ETF or for another ETF, and we will talk about that shortly. Let me introduce colleagues who are in our panel today. This is Bek Sultan Hoja Anwarov. I was able to pronounce your name. The CEO of Pydex company, which is a new startup that was created by AIFC for engaging different clients for different broker services. Talgat Kamarov, who is the founder of Centros Securities. Sergey Lukyanov, the chairman of the management board in Freedom Finance. There are very many freedoms, that's why I confuse a bit what kind of freedom you represent. Adil Musayev, Anaid Shakaryan, the CEO in Invia Investments, in ETS platform, representative of Armenian company, Invia Investments. Adil Musayev, our guest from Uzbekistan, who represents Uzbek company, Alkes Research, and Nikolai Ruzaikin, who is the chairman of the management board in N1 Broker. So, colleagues, let us applaud to our speakers, and I will give a few words that our ITS conference. But we didn't tell anything about ITS, but we did it consciously as far as the main value we announce about the strategies and products that could be implemented via ITS and to investors and mediators. But I will talk about the latest news. There are very many different news, where we are now and where we plan to find ourselves in the nearest future. And in summer, we finished the formation of our own clearing infrastructure in the AIFC and got a license from the central counter-agent and the settlement depository. And this is the first central counter-agent that appeared within the framework of the International Financial Center. And we are pleased that most what we do is done for the first time and develops the infrastructure of the financial center as central counter-agents and ETF we issue. And another news is what we already said about. We listed at the beginning of this week additional 1,000 new tools, and so now we have 2.5 thousand instruments that are listed in the platform, and 4,000 to 5,000 more will be in the nearest future. And this ITS service that we presented today as analytical one obtains more and more importance as far as to figure out not only in the wonderful 7 top companies and 5,000 tools, more for investors will be a challenge, and without analytical support it will be even impossible. And we plan in the nearest future to add in the trades the bonds for the trades as well as for repo market development, and our portfolio margin helps the participants not only to trade but also to place in the platform the monetary funds as well as to attract the bonds, which is very interesting for the participants in order to give such kind of shorts to our clients. And within the framework of AFC, we plan to regulate the marginal trades of the that will give the shoulders to clients as well as to do it in more active way. Also, the plans include the launch of currency tools as far as the trades are in the currencies of those jurisdictions where the primary listing was done. Then we will give opportunities to do the conversion operations, and relatively we plan in the nearest future to open the opportunities for currency pairs to all excepting tenge, and relatively to develop the tools for currencies that could be interesting for the participants. And we already discussed this in our in the lobby unofficially between the participants who are interested in such a topic. That's why we are moving and developing in active way, and hope that with every day the number of participants who will use the tools that we create and created. And let us switch to the discussions. The first will be devoted to the occurrence of our platform stimulates the new participants in Kazakhstan feel interest in the fintech tools. And on the other side, there are jurisdictions where the banks that are financial marketplaces just absorbed all the investment business with and small and middle-sized investors don't have any room for their development. In Kazakhstan, everything happens in a different way. There are representatives of other jurisdictions, and that's why the first question that I would like to address my colleagues would be, what is the financial model of brokers in fintech startups, according to your view, will allow to compete with the international brokers that give access to international platforms and make the businesses of financial mediators of Kazakhstan as well as other countries that work here, make them successful. I will give the floor to Bek Sultan Hoja first of all. Thank you for your question. First of all, we position ourselves as a technological company with a turnover license, and in Kazakhstan, from year to year, the number of brokers grow up. According to statistics, 5% of the economically active population is active in the exchange market, and we see quite a big gap in retail investors as far as all the brokers from Freedom and etc. are more focused on high-tech investors. And we as a startup, fintech startup, understand that there probably it will be difficult to compete. But we see a gap, especially in retail investors. The average age of whom is 35, and we see more opportunities there. But in order to serve that number of clients, we need to have very well-established processes for brokers, be more automated. And we started from automation of traders' work, and we wrote the accounting system. And as far as I know, in Kazakhstan, there are 2 brokers who have accounting system and trading system. And inside, we just described different 50 appeals. What will it give us? The more investors will be able to use this system at weekends, and like accounting management and running is done by robots. And we have the developers in our team, and I have important news. And my colleagues from our team wrote 10 minutes ago that the updated version was released. You may just upload it. And we were moving to that for a long time. And we were developing and considered different counter-agents from different countries, from the US, from Singapore, and faced this problem related to automation. It was difficult, first of all, to open the new line. This is one thing, to automate the processes, which is another issue. And second, we didn't see any fees that were too big. And we just refused from the agents, and probably appreciation should be expressed to our counter-agents, which we found, and how we will compete. If we do a right product and do a right marketing campaign, then we may obtain all these clients. But look, they all are banks like Halyk, Jusan, and they should be attracted in some way. Yes, how we are going to do this? We are focused very much on what we do. That means that we are focused. We don't have any asset management and etc. We are focused on brokers business and how to do it in the way in order to gather a big audience. And we united the social media with the opportunity on the bonds management and how to communicate with the audience, how to discuss with the investors different issues. And with that, we'd like to develop the community, because the biggest problem in Kazakhstan is the low literacy in the population. That's why we want them to develop themselves as financists. Talgat, look, on the one side, there are banks. On the other side, young startups that automated everything. How you will survive this? You survived a lot of different events, and this is the other revolution. Tell me, please, how you will survive this revolution. Thank you very much, Roman. First of all, I'd like to support Big Sultan with applause, as far as he is the first who created the localized platform and automated it with the accounting own system. That's why I just admire these IT guys who are graduates of different universities, and they did it with their hands. Why I know him personally? Because he is my former employee. He said, Talgat, we will have another way. We'll go in other way. And I said, good, let it be. Let us continue communicating with each other. And I welcome occurrence of new players. And this is the historical remark. I'd like to say that I was for the competition all my life, although this is just against my interest as a corporate worker and chairman of the Association of Banks Managers and governors. And from 2005, we worked, and in 2008, the number of brokers came to 200. After the crisis of 2009 to 10, the number of brokers reduced up to minimum, and before the pandemic, we had only 20 actively working brokers. And now, according to my rough estimations, including the AIX members and the ITS now is added to that, we see foreign guests working in our market in active way. Then this is algorithm growth of participants, which is good. And good from the other side, that pandemic just provoked the number of digital solutions, technologies, digital documents, identification, bio-identification, and etc., which was done for defending the service beneficiaries. And you also see that financial frauds also increased, and they give you very attractive proposals with participation of Western brokers with amazing yields. And in Kazakhstan, we see a lot of Western fraudsters, and the tax committee makes everyone to report on the assets located overseas, which stimulates the shift of investors to store their assets here in Kazakhstan in order to announce it as a local asset, not a foreign one. As for our company, it works in the market as one of the oldest players. We work in brokers market of services as well as on asset management market. Our main business is asset management rather than brokers business, because broker is a mediator that should keep track of all the clients and should work with dozens, hundreds of clients. And that's why among our players, there are those who are successful in this business.
And we mainly provide solutions in asset management. We have these funds that went through different devaluations and crises. We have the funds that invest. We have treasuries. We suggest our clients the solutions, simple solutions. These solutions allow you to choose the specific tools. You can invest in ETF, and you can just buy the funds that would follow the index. However, our funds are actively managed, so we are competing with S&P, with local solutions, and so we are happy to see more players. There are more intermediaries. We see many participants, and it's interesting for us to see the development of the market. At the background of the global retail growth, when clients come to trade, do you see the growth in demand for trust management? I mean, what is happening now? There are more clients that go to trade by themselves, or do you see the client database for trust management? Maybe clients, by trading by themselves, they come to you to trust management. You know, everything happens simultaneously. There are young people who want to gain their own independent experience, and they see themselves as future Warren Buffett, and they invest in some definite. We have brokers clients, and they follow the recommendations of analysts, they read bloggers, they read some extracts from articles of large analysts. But a part of clients, at the same time, they invest also into the mutual investment fund because they want to diversify their investment portfolio. They understand then when your asset amount is increasing, you lose control. For example, if in your portfolio there are more than 25 tools, of course it is difficult for you to respond timely to some specific market movements. So part of investors have already gained maturity and they consider that the part of my portfolio shall be with a professional company. And then there are 5 or 7, let's say, tools that I will follow by myself and I will work with by myself. There are some mature investors that are busy with their main activities, with their main business, let's say, and they are not, speculating at the market. Yes, they understand everything, but they do not have time so to sit monitoring the situation 24/7. So that's why, for 100%, they would ask us to create for them the fund, or they invest just in bonds because they consider it as important tools. So mainly you see the increase in trust management demand, right? Yes. People are increasing their financial literacy, and they understand that it's better to invest through financial tools. Okay, thank you. Let me go to our next speaker. In the first panel, they told us that ESG is everything, so that's why we have here a lady who is in the middle. I would like to give the floor to Anaid. She is head of First International Brokers that came to ITS. Let us give her a round of applause. Anaid, why are you here, and how do you plan to build a broker business in Armenia? Thank you so much for your question. Well, first of all, our company is called Invia Investments. It's an Armenian company, investment company, that is the first in Armenia that has its own technological tools in investment area. We suggest access to international markets and to the broad range of tools and products. We do our business in 2 areas. First, access to international markets, to the affluent individuals, family office, institutional investors. And the second area, we have a BaaS service, broker as a service. We provide this service to banks, to investment companies, to fintech startups. So let me tell what it is. These players will not have to develop their own infrastructure. They can use our infrastructure, and through our infrastructure, they can provide or give a broad range of tools to their own clients. So you do the turnkey service to your intermediaries, right? We provide access to more than 60 international platforms through stock exchanges like ITS, like Prime Broker, through Prime Brokers that have direct access to markets. As I've already mentioned, we are a technological company, and this is our key feature. This is how we're different from other Armenian brokers. We have our own technologies, we have trading platform, and you can join it through API, online back office, trading platform, mobile application. So what these technologies can give us? First of all, we offer our clients more tools. We can adapt new tools. We can respond to our clients' requests timely. We also can, in a timely manner, help our clients in case there's something happening, and competitive prices. Our own technologies allows us to make our services cheaper. And to give a broader overview of what we are doing, I want to say that we are a young company that believes that technologies, in combination with a broad range of tools, will make our company the first player at the Armenian market. And I would like to ask my colleague, he is the head of the developers department, Mr. Kirill Pechilkin. I would like to ask him to tell about the products that we suggest to our clients and to our partners. Good day. Can you please show a presentation? You know, I've seen your video, advertising video, and it would be interesting for me to see your presentation because your video suggests something interesting. I've never seen such things before. Let me introduce myself. My name is Tachilkin Kirill. I am engaged in developing in fintech. We have a company with the experience in the implementation of big financial projects. And today, let me show you what we have done, what we've integrated with ITS, and what our plans are. Let me start from the trade terminal. This is a powerful tool for professionals. This tool covers a large spectrum for trading, from short-term investments up to long-term investments, from short-term strategies up to long-term investments. Then this web terminal has an adaptive features, so you can trade from different devices. It is also open source project, so the company could take it, could develop the code under their own needs and deploy it at their facilities, put their logos, and it gives the opportunity to trade. Then we've also implemented the specific tool. This is a tool for traders who do hundreds transactions per day. So this is the scalper glass algorithm, so you could see orders and work with them quite fast. For some conservative traders, those who prefer technical analysis, we have integrated the graphs of trading queue. It has more than hundreds of indicators, 50 convenient tools, 12 types, and much more, many more things. We also have stop applications, so you can relate, connect, you can make groups, and gives you more control over the risks, and you could build more complicated strategies. Also, quite easily, you could create different spaces, and you could switch between them. You can make the specific analysis environment. You could look at the trends, then you could switch into the space for active trade. You could observe the situation. These are the key issues with regard to terminals. Well, I can speak a lot. We have lots of other widgets, however, the time given to us is limited. The trade terminal works within OpenAPI. OpenAPI gives us opportunity to have different orders, from limit market to iceberg orders. You could also see real market data. You could work with anonymous transactions. It also supports different protocols for connection. And It could give you the historical data. In general, it provides many opportunities for integration. So you can just integrate your terminal, or you can integrate software for automation of trades. And as for competition with banks, no need to compete with banks, but you can be friends with banks. And so you could also install broker service. It's quite easy. We also have very good documentation with some examples for developers. And in general, if somebody wants to join ITS exchange, you could do it through our tools. And the final thing I would like to tell you about is a mobile application for Invest Consultant. It's called Super App. It has friendly features on opening account, on replenishment of your accounts, on observing your accounts. Then Invest Consulting. It provides the access to recommendations from the best market experts, and there is also the format of open ideas. You can make your decision on if to do the transaction or not to do the transaction, so you can connect the expert to your account and to work with this. We also have a convenient interface for independent trade. You can see here's information on companies, so you can put the limit orders, and basically this is it. I've told you about 3 products. However, we have many other cool solutions, and I would like to thank our partners, ITS, for active participation and for technical assistance and integration, and I guess that we'll have many other interesting solutions. Yes, ITS ideas, so you haven't integrated it. ITS ideas are not presented there. Now I would like to give the floor to our colleague from Uzbekistan, because we are extending our geographical coverage, and we hope that we will see very soon the other international participant. Thank you. Thank you so much, Roman, for your question. Good day, everyone. I would like to thank the organizers for this event. It is a cool and very interesting conference. And this is the first time when I am a speaker outside Uzbekistan. It's a great experience. Actually, everything is here for the first time. We like to do everything for the first time. Let me introduce myself. My name is Adil Musayev. I am a partner and director of Alkes company. We work in Uzbekistan at the local capital market, for the moment, and we provide all the range of tools, common tools for investors, for banks, for residents, non-residents. I have prepared several slides, and let me show them to you. Let me tell you about the Uzbek market. It's not a big one yet, but we hope that it is a promising one. Well, first of all, I'm very happy that the cooperation and partnership between Uzbekistan and Kazakhstan has been strengthening. And you know that large Kazakhstani bank, Halyk Bank, entered the Uzbekistani market, and it works under Tenge name, and their work is quite successful. Right now, there are also talks that Kaspi would come to Uzbekistan through Humoy, purchase of Humoy. It's Uzbek MasterCard, let's say. Freedom has been working at our market for quite a long time. Then Green Finance Center, I will also tell you about this center. This is a certifying organization for green bonds, and actually at the regulatory level, we also have cooperation. Just a couple of weeks ago, AAFC and NAPP have signed a roadmap on conducting joint events with regard to crypto assets insurance, and they have discussed the opportunities of issuing securities, Sukuk, IPO, so Uzbek issuers at AIX platform. It's an interesting idea, and you know, we also work at our market, and maybe you know Iman. This is a Uzbek startup. So, and jointly with Tennis Capital, we work now. We are advisors, they are underwriters, and we are planning to issue Sukuk, double label Sukuk. Speaking about Uzbek market, let me start from the quotes of Jim Rogers in 2021. No, it was in Forbes. It was in Forbes in 2021. He was writing about Uzbekistan, and he said good words about Uzbekistan. And I hope that, as a representative of Uzbekistan, I hope that he didn't change his opinion. So, in general, speaking about Uzbekistan market, I would like to give you several numbers. So you see PNE index 5.6, Buffett index. Well, I actually have never thought that Buffett index will be used for Uzbekistan. However, we have 10%. As for liquid securities, 3%. So today, Uzbekistan market doesn't show its economy, doesn't show its prospect. The economy of Uzbekistan is in top 100. However, it is not shown. So right now there are different measures so that to show the reality. So as for taxes, you see for individuals there are no taxes, capital gain, voucher taxes, zero, and so on. We also have some enhancement and improvement in governance. More than 40 independent directors they have been invited to the advisory committees of Uzbekistani companies. So I think it will also impact the situation. However, the factor that would distract maybe investors is the liquidity. However, we see the changes, and over the last year, we see that number of transactions have been increased 5 times. So it's a great growth. And let me also boast here. We have about 70%, but now 50% they are done through our brokerage. But maybe it's not fully our contribution. Actually, we had partners from JET, and we provided them our infrastructure. So these three factors have been united, and we were able to invite 35,000 new investors to our market. And here you can see the growth in the number of our clients. And CPA for us, so the price of attracted clients is zero for us because our partner JET is working with it. And here I showed several initiatives. Some of them have been already implemented. Some of them will be implemented in the nearest time and will help to develop the market. So IPO, privatization. Right now in Uzbekistan, we have the people's IPO. I guess it's the same like in Kazakhstan. Last year we had 3 IPOs. This year we also have 2 or 3 IPOs of the major mining complex. We also have green financial market development. And if we have here Green Financial Center, I want to thank them because right now we are issuing first the green bonds. We are going to be the brokers, and we have the other companies that will be engaged in it. And also, we hope that very soon it will be a legal framework on Sukuk. I think it's obvious phenomena in our country. And as for bonds, just recently it was an order by the president, and they allow to do the bonds in currency,
which is much more attractive both for issuers as well as for investors. And it is partially related to the debt market and equity market, and we expect that guarantees and deposits are expected to be at 100% for any amount, and very soon it will be approved, and this also is another incentive. And the currency stock exchange, which we have probably during the next 4 to 5 years, the exchange funds will be in operation, and foreign brokers probably will be able to connect us to ITS, and there could be famous companies working there. Nobody knows. This is just approximate information about Uzbekistan. Thank you. Thank you very much. We also hope that Uzbekistan will be the next who will be connected to ITS. Now the floor is given to Sergey. We have two questions to you. One is obvious. Freedom for many years positioned itself as a company that in Kazakhstan has the best access for its clients to international markets, and ITS makes this access more democratic and simple for most of Kazakhstani participants. And then the question is obvious: why you need this instead of putting obstacles for that? You participate and support and provides the access to your clients. And second question, many years knowing freedom, I just learned the phrase that stocks are not purchased, stocks are sold. And we saw the act of investigations and many things that replace this. And we talked about AI. Maybe all this will not be needed. There will be only one button to take money, and then AI will estimate everything. What do you think about that? A very good question, Roman. Why you ask such questions? They are very interesting. I never thought about them. And I am happy to welcome everybody, players of a new market. And Freedom for 15 years operates in the Kazakhstani market. We're one of the first who started the market for retail investors, started to regulate it before AFC was established, and we registered the first local broker that started its operation in AFC. And AFC was very comfortable as far as it fully showed the elements of British law. And during half a year, we were able to establish all our infrastructure, deploy it, repeating our foreign services, and were able to build a broker that worked according to the international principles and presented most of our services, starting from the bank cards and finishing with mobile simple applications. And since that time, Freedom de facto presents two brokers, joint stock companies, Freedom Finance, that operates and specializes exclusively on functional investors, and for retail investors we open the accounts, and there is the main stream of retail investors for whom we represent the International Financial Center, which is the broker with international services and rights. We were one of the first that offered all the infrastructure that you are able to localize, and we congratulate you on your occurrence, and we will be able to provide an access to you to many companies of Kazakhstan that would join and become members of ETF. What are the advantages? They are very simple, and I'd like to remind about the time, and we have the unified time zone, and all the trades with traditional American bonds, they start at late at night, and the client coming home late in the evening, very tired, starts to do such kind of deals, and up to 3 a.m. So we cover this project, and ITS can cover all the time, which is very comfortable for other international institutions. And this is wide range of time zones and clients who during the time can choose any time zone in order to ask why we do this. Talgat says that this is good as far as this is competition. On the other side, the pie grows and the shares are preserved. And if the pie grows, then the share also grows with the common pie. As soon as the market grows, specialization also increases. And each mediator looks for comfortable niche. For some, it will be management. For others, be opportunity to be an independent broker. And certainly it requires the financial literacy, how to do social investments and treat the money in educated way, how to deposit the money, invest in different tools that differs from traditional deposits in order in long-term perspective to save for your retirement or to make money and create some cushion of capital. ITS, first of all, relies on international bonds. Yes, this is democratization, and all of us can have an access to cool assets to 2,700 now. And according to my estimation, even 2,700 bonds will look like 75% of funds that are traded in our platform can be covered by this 75%. Yes, certainly, every client has a demand for different bonds, and we cannot cover 100%, but can cover huge demand in that giant market that gives us an opportunity, given the fact that now we have an opportunity, or will have an opportunity, to create repo market, and any client could have not only an access to the shorts, to the shoulders, so-called, but also be able to open different trade lines and to manage the bonds as alternative platform on managing the liquidity, which is very good. That's why let all the flowers be flourishing. As more competition is in the market, as more opportunities will be for increasing the pie. Don't worry about that. It's hard to just worry. We need to think that banks will just withdraw everything, and that's why to think about some methods of fighting against it. Yes, banks could just turn the cards upside. Or you have some indicators. While they are being deployed, you will be able to run away. No, not to run away. In the Western countries, whether they were running or not, if you have such a strategy, you may just escape into the ocean and float there. This is the issue of niches, as well as changing the common world picture. While we have such revenues with such rates, and banks make money on different things. They have products that give different margins, and it's not beneficial for them to spend their resources on studying this and getting connected. And with the development of financial literacy, it's hard and costly, but time changes. And as soon as this market becomes more interesting, tastier versus the current position, they will pay at this market and study what they do. And there are big banks that develop their applications and get incorporated, and this is cool. And as far as I remember, two biggest banks gathered quite a significant number of applications. Is good as far as the niche companies win from that, and they just make money on something coming to the market. And you may work with this client. You may offer the services of cleaning, clearing, management. And banks sometimes think that this is very expensive, and it takes time as well. Personalization and customization is expensive, and that's why they can offer to the clients more interesting resources, analytical reviews. We work with training on financial literacy for brokers, some courses for qualification improvement, and certainly the button of next back you were talking at the beginning. When we were preparing for the panel discussions, Roman said maybe it will be the time when brokers will not be needed. Like the next stage could be GPT chat. You just push the button and AI will do everything for you. And this application will appear soon, and it will be some magic thing. We are dreaming now, but AI is being developed in a rapid way, and there will be integration soon, which will be another challenge soon, like trusting, management, and etc. We all try to integrate it and make a lot of efforts on that. And we, first of all, do contacts with the support, because the client should be provided with a support 24/7, and applications with the AI will keep track of the clients, and then when he is trained, there will be no support further on. And all this will be developed in this way, I think. Thank you. Nikolai, what do you think about brokers' business models, as well as about the products that could be interesting for the clients? Like, for example, in these 2,700 tools that are listed now, there is Bitcoin, and this year there was no precedence event. Actually, the crypto market was infused into the debt market. For a long time, they just existed in a parallel way. And this year, this happened. And FTS also thinks about competitive advantages, about products that are more relevant now for the clients. What do you think about that? Roman, thank you very much for your question. Probably I, like my colleagues, will talk about my company. I am the managing director of our company, which exists for 3 years, and very soon there will be a year when we launched in this full-fledged mode. And before launching our project, we analyzed Kazakhstani market and saw some certain opportunities in it. First of all, related to the access to the dollar tools and those rates in USD for 1% and risk-free revenues that tools provide with. And they give some certain opportunities. And together with the partnership with any biggest bank, we saw that such business model could be viable. And my observations during 17 years in this business gives me such an opportunity to split all the participants into those who are pioneers, who skim the margin, and being no banks, they being a pioneer, were able to skim and survive in the market. Those who came to the market later, they got the secondary factor related to the flows of clients and sales, which are expensive, and it depends how much money you have in your reserves in order to build such a business. And partnerships helped us to become a partner of Bereke Bank, and such a model became viable and gave us opportunity to develop in a rapid way. And we invested even more in infrastructure as well as in the products. And when we started to build this infrastructure for providing access for our clients in the international market, certainly we faced with the fact that work via prime broker is a complicated process where there are very many challenges that should be ensured on a constant basis. And we, in this regard, are very happy that ITS appeared, and we will be connected to your platform because this solves us rapidness of entering the money in the client's accounts. And this takes from several hours to 1 to 2 days when we work via a platform of Kazakhstan, which will accelerate this process. And things that already are implemented in the platforms, including taxes that can be done via ITS platform and could be more interesting for the clients and cheaper as well. And coming back to the line of tools, our focus on conventional tools, bonds, and stocks. Coming back to Bitcoin, there is interesting observation when we, with our partner Bereke Bank, did a research in which we tried to find some insights for ourselves when we took decisions to develop this or those products. And my observation was that 80% of clients of alpha segment already have some experience related to crypto, and they just differentiate between stocks and bonds, and they are very well managing crypto. And we were allowed to invest in Bitcoins, and we may say that in full meaning of this, well, this is a very nice class of assets that not better or worse than valuable metals class, and they are named as digital gold.
The regulators of different jurisdictions have different opinion with regard to these SEC stage, AIFC has quite a liberal approach to this. And in general, we see the demand from clients so that broker would give products that would do the exposure for cryptocurrency, including Bitcoin, because Bitcoin has a biggest share of capitalization in the market. And there are some other box solutions that also gives exposure for Bitcoin or for Bitcoin index or for some other cryptocurrency baskets. And in general, we think that this is must-have for any client to have in his or her portfolio a number of tools that would allow to participate in cryptocurrency growth. SEC gave the green light to all institutional investors, at least those who are in US. And we see with this that there is a big liquidity, and this market will be replenished. And if we speak about some long-term tendencies, so I think that would be the inflow of money to cryptocurrencies through traditional, conventional financial tools, because for a long time, the access infrastructure to cryptocurrency was unusual or unusual for old money. And now infrastructure for this money allows to invest in such assets, and it is in a clear way. So I think this is like this. Well, thank you so much. And to continue our discussion with regard to the tools, I would like to move to ETF index, because in the nearest time, as I have mentioned, in the nearest days, we are planning to launch the trade of two ETFs. And the key feature would be that it is quite cheap. It would be about $10, the basic rate, and so almost any client could use this tool. And the second advantage in our case is that there would be liquid products including Kazakhstani security, so the client could take exposure at the international securities and with a small share of local tools. So on one hand, this would diversify investments. On the other hand, it allows to have the local exposure. And I now would like Alexander to have a presentation for 5 or 7 minutes, and then we will talk about it. Thank you. Thank you so much. I would try to be brief. You know, we have had quite a long way, and in the end of last week, AFSA registered the first fund, and this is the first index fund. Is a real ETF in Central Asia with the exposure at the global market and exposure at local market as well. When we speak about the cake, lots of words have been said about the growing cake, and our partners are have been asking us what the market that you're aiming at, what prospects do you see here in Kazakhstan. And actually we thought what number we could reach. And it's not a secret that the longest border is a border between Kazakhstan and the Russian Federation. And besides the common borderline, we have also the long history that unites us, and we have the similar educational systems. And we think that the behavior of the households with regard to saving is also quite similar. Speaking about absolute numbers, the economy of Kazakhstan is about 10% from the Russian Federation economy with regard to GDP and with regard to the population. And if we speak about income per capita or savings per capita, the numbers are also quite comparable. So that's why we think that the market of capital investments in Kazakhstan and in Russia Federation should also differ in about 10 times. And if we look at the reality at what is happening, we see that with all the minuses that we see at the Russian market, with a big level of uncertainty and disbalance, still we see that the market of equity investments is 300 more than the same market in Kazakhstan. And it could be explained quite easily. It's just a narrow investment proposal. Currency proposals and with regard to access to global markets, it was quite limited. I mean, before ITS was launched. And I think that the situation will be changed. If we speak about the market of collective investments, we think that in the nearest years, we would be able to see the increase of this market. Therefore, we are ready to provide right tools for the investors. The tool that has been registered, let me tell about it. This is our flagship ITS World Index. Today I've listened to Jim Rogers and what insights I made. So he told that if you don't know where to invest in ETF. And he also told that don't invest in the things that you do not understand. And if you are not a professional investor, it's better to buy the companies which activities you understand. So if you look at this slide and this graph, you can see Toyota here. This is what's quite popular here in Kazakhstan, Toyota and Kaspi. So these are the 50 companies in this basket. And so these companies are familiar to even to school children here in Kazakhstan. And these are the companies, the business of which is quite clear to everyone. And here you also so today Timur Turlov has said that these great 7 companies are growing and some other companies are not growing. However, here we see diversification from the regional point of view. We see here European companies, we have US companies, we have Asian companies, and we have here companies from Kazakhstan. We see from backtests, we see that from summer last year, the growth of indexes of ITS World was about 96%, and it was similar to the indicators of S&P 500. Since the beginning of this year, we see plus 16%. So it's about 25% per annum. And it's quite a good indicator from the asset diversification point of view and from the incomes that this tool could bring. When we are saying that we've made a new tool, and in our opinion, this tool could change the game rules at this collective investments market, I can say that actually you could buy Spider or some others at the local platforms. So we have constructed our fund this way so that to answer the question, why this is a game changer and why ETF is a real ETF. Because if you look, you would see, if you look at the advertising material of big companies, you would understand why ETF is a cool topic, because they are popular, investors understand them, the tools are quite clear, because they are quite accessible, because ETFs are liquid, and the costs for the investors, they are low. And there are no surprises that non-qualified investor could challenge. So we started from the popularity and from the clarity of this tool. And the QQQ tool is a tool that covers top 5 funds. And if we speak about Kazakhstan, we see that there is no institute that would be interested in promoting it. So today we were speaking about margin of a broker from this QQQ or from other ETF. Actually, they have the same indicator. So, but there is no any specific reason to develop this. And so in ITS, we have decided that we will develop this range of ETF and we will let's say, promote it at the market. We are going to start this marketing. We are going to attract brokers that will use it, and we will try to promote interest to this from economic point of view. So that's why this awareness campaign will be organized. We want to make these tools popular. We are ready to invest in it. And speaking about accessibility and availability, the price of one share, as Roman has said, initial price would be $10. If we speak about all index instruments, SPIDER or QQQ, it would be about $500. And I mean, you know, last session somebody said that ETF is a good beginning if you don't know anything. And actually, most of the potential investors in Kazakhstan are in this situation, right? You don't know about market, you want something simple, something cheap, and you can just try with this. It's like the price of a cup of tea, right? And so you have taken this ETF for $10. You can make operations on transactions. You can buy it and forget about it. You can do different transactions within a day. I think it's a great opportunity for new brokers also to offer this tool for trying out. But when I say trying out, of course, we understand that there should be a liquidity. And Roman has said that we want this tool to be in good liquidity. As for QQQ, you know, yesterday at local platforms or markets, we didn't have transactions. The spread was about 2%, and over the last years, it was about 50 deals on these tools. But the deal was about one or two securities, so we do not talk about liquidity here. We will invest in the liquidity from the first day of the trade. We are going to have several market makers that would be there from 10 in the morning up to 2:45 next day. And so investors, if they buy this tool for $10, investor will be able to sell it and to sell it at the market, not with a spread. As for expenses, so expenditures, they're also important. If we look at the local market funds, we will see total expense rate is about 1%, well, plus minus. And initially, we wanted to make this tool very interesting for long term, and that's why we put this total expense ratio on management fee that is the same as with QQQ, so it's 0.7% per year. And as for surprises for investors, you know, sometimes when an investor sees that QQQ has a spread of 1 or 2%, actually we, with our market makers, made an agreement to have spreads on these tools about 0.05%. So this tool shall be flexible, shall be interesting for internal trade, for long-term investments as well, because this is a contribution to the expensive security basket. So here for $10 you can buy or have this piece of a big cake. We think that this tool could be interesting for institutional players because of the low price, because of the high liquidity, and we are pretty sure that this tool will be the game changer at this market. Thank you. Thank you, Alexander. Yes, we believe in index products and we want to have a liquid tools that could be good for investors and for traders. And besides this, we open the range of ETF. We have the methodology, we have the technology, and we have the solutions so that to create indexes for any investment strategies. And so in this specific situation, we do not perceive it as two tools. We are ready to develop the full line or full range, and maybe according to requests of some participants, we are ready to create custom index, custom funds. And today I've heard 3 ideas, and we are ready to partnership and to the future development of the range. Can I just a second, let me interrupt you with regard to what you have just said. You know, we have had quite a difficult way of the first ETF and the AFC, and we are ready not only to support other ideas of the participants with our index solutions, to have interesting solutions, but we are also ready with our managing company to make the mutual funds and to promote them through all the brokers that would join ITS. And the second tool that we hope to have in the nearest time, it would be the index ITS Sharia that will comply with all the requirements with regard to Islamic financing, and it also will be a new product that would be in demand at the market. And in conclusion, I would like to ask my clients, our speakers, what from your client's point of view, how do you perceive this phenomena of retail clients that come to markets as a mass? Is it about socialization? Is it about just leisure time? Or is it the wish of people to earn money? So let us say it the following way. If we had this button to earn $1,000, will they'll trade? Maybe people come here not only to earn money at the market, but maybe they also come so that to have their increased social status. So maybe for them it's like intellectual, game. Because I know I come to fitness, and my fitness trainer recently asks me, like what he or she shall buy. It's for me, it's the sign that everything has changed, because now fitness trainer is interested in these questions like what to buy or what to sell. So I want to hear your thoughts on it. On one hand, we have index products. On the other hand, we have this wish of an individual person to buy something. So what's your opinion on it? Roman, let me start answering the question. For quite a long time, I was working with middle-class clients, with large clients, and I think I actually understand what people want. I would agree that, first of all, this phenomena of mass inflow of investors, this is about socialization. First of all, it's about self-expression, self-determination, and it is also about drive and movement. We've seen the case with GameStop, where people had a real interest to participate in this global event. They want to be related to these major global events. And this is also the wish to show that they are dinosaurs and they can do something different. But at the same time, the clients that come, they are also interested in some specific local names. They're interested in trading, they're interested in creating communities, they're interested in sharing experience and ideas. But when we speak about ETFs, it is a seldom situation or a case when clients speculate with the ETF, because ETFs are perceived as a tool for long-term and mid-term investments.
And probably this is another category of investors who are conscious, who are experienced, who are the clients who, for investments, use and hear the advice from the professionals. And we give ETFs to clients and access to the tools. And for ourselves, we use these tools and techniques as the products, tools that allow, first of all, to do first touch of financial markets, to feel that this is a relatively safe and civilized tool for preserving capital for mid and long-term perspectives. And as I said, there was a research of the clients, and many of them note that financial markets for them have association of loss fears, and if we use such kind of tools and lose much money, you need just to try do this. And that's why people have such fear, and this fear is because of the lack of understanding. When I am asked what should be done for the beginning of investments, as for the launching, and Alexander was saying about that, I welcome the tools, and we just shared our ideas what other products could be created. I think that ITS has huge advantages because of that infrastructure that can be used for flows of different ETFs, and all the market participants could, in joint efforts, offer this to their clients, because not every participant will feel economic benefits to launch such kind of funds and find the relative volume of assets. But when it is created in a civilized way and some participants behave as drivers and is affordable for buying different assets, so this is some certain value. Colleagues, do you have any more comments? I'd like to say that now there is a growth of financial literacy in population, and this, together with the technologies that give such a access to private individuals to enter the stock exchange market, and affordability of such a market is just appreciated very much. I also would like to comment. We'd like to say that we launched an access to our clients to ITS, and now they can just touch it and try to behave in some baby testing, and all our clients, both retail as well as companies, can try to do the deals. And until the end of the month, we just launched this trial period, and we do it with consciousness, with carefulness, and we want them to train, to test everything in order to avoid mistakes, and to make the tools attractive for the clients, and they could just trade from early morning till late night. But as for me, let us support everything and everyone, and index funds also will be included into our program, as well as frankly speaking, I never saw any client that came to me and said, I'd like to buy ETF, as well as any mix with our Kazakhstani bonds and etc. I do not believe in it. People come to buy something specific. Like, for example, I'd like to participate in counter growth. And they come to buy bonds of Kazmunaygas, it's clear, comes to buy some bonds that give any dollar earnings much higher than from Kazakhstani bonds, or to buy sukuk. I never remind such a thing, never saw such clients. But nevertheless, those who know that sukuk could just increase in its profits after commercials. But people come to financial markets just to make money, and they buy such bonds that are attractive as number one. And there are those who come also, don't want to use the saying, a stereotype phrase, but nevertheless, there are people who want to show others that they have the brokers' accounts and they already operate as brokers. They are not confident that they are interesting brokers. So this is just an interest for them for promoting themselves. Maybe they will attract others, make them interested to do investments. What do you think? One of the advantages I'd like to highlight that ETF is a live tool, and there are managing companies that could manage them. And in my history, there are investors who just invested a long time ago, and they were at the hypes thinking that this was a super idea. They just saved or presented the bonds or stocks, but some of them stopped being liquid. Some companies became private or bankrupted, and etc. This is an example of advantages of ETF, like direct investments and success stories that investors like. But ETFs are updated always, and S&P 500 existed more than 1 century. And there are always new names, new unicorns, and that's why ETF is that ideal tool that could be purchased, be accumulated, and is updated as blood. Will you sell ETF? Certainly, because I should also make money on that. Certainly, it's clear I will not buy. If I say so, then I will just punish myself, my pocket. As far as for myself, the occurrence of clients and the market is what is offered by the market. If I say do not buy this, it means that I limit the clients, and this is against my interests, against interests of my client. That's why I just underline, as a managing company, we are present in all the markets, both in international ones, in AIX, in ITS, and we now go through onboarding because we want to test everything and to give our clients such opportunity to test everything, compare the tools, compare the opportunities. He is everywhere. He has not only deposits, but also investments in stocks in KASE, in AX, and investments in investment funds and in ITS. And he compares everything and always makes a conclusion where it is better and where he should invest more. And this is a choice, which is good. Will you say anything? No doubt we will support ETFs, because you asked why retail investors come to equity markets. This is because obligation once more, but as for the financial literacy, the client becomes more conscious that S&P 500 gives 9%, when banks in maximum gives only 1%. If this is in case at 10 years, then inflation just swallows all the revenues, and that's why you need to invest in the stocks and make 9 times more than in bank deposits, first of all. And second, our company already celebrates 1 year of existence, and we just discussed how we will be present in the market, whether we will be investments or trading company that makes more money for brokers. And there are different sets of tools. There could be short positions or options, but in mathematics there is a game of game theory where participants of the game can win if he or she is constantly playing this game. And if you do the training, then for that trading, it's clear that 95% of them will lose. And with that, we will lose the clients. That's why we discuss with our team and with the shareholders that we will be investment long-term platform players, and this is first of all ETFs, and we wanted based on ITS do our own projects together with ITS, and we saw examples of other companies that gathered $8 trillion, and with ETFs, you have some future. Certainly, we will support and create in partnerships other tools. Thank you. Now, colleagues didn't see, but already want to go upstairs, and we were reminded to finish and invite everybody to our party. That's why I'd like to express appreciation to our colleagues who participated in these panel discussions, and we internally like to change the world. And I am pleased that improving the world and constantly changing it, what we heard today, in my view, changes significantly the market in Kazakhstan, and not only in Kazakhstan. I think that in joint efforts we will continue to change the world for the better. That's why I call everyone for the cooperation, for friendship, for partnerships, and we are aimed at creating products for you. We are always open. We will enjoy listening to you and trying to implement whatever comes into your heads. And it's certainly a wish to see these ideas in your heads more often. That's why thank you very much. Now I invite everyone upstairs to our party. Colleagues, please give us information where we need to go to.